you're worried about what's happening. ASML does fairly well. Novo Nordisk does fairly well this morning. Maybe that's the place to run and hide when it comes to Europe. Okay, let's talk about some of the other single stock stories. We've just been talking about what's been happening with the shoe story with Dasher. Let's figure out what the rest of the picture looks like. Joe's probably on the shoe story as well. Joe, over to you.
So we are going to start on the sportswear stocks, guys. Seeing a bit of a read across in a couple of those names here, including Puma, and also a bit of a decline in some of the retailers. We've got JD Sports and Frasers there. JD actually the biggest decliner. They are one of Nike's key partners in terms of the retail, and we also saw Foot Locker declining and Dick's Sporting Goods in the US, and JD has built a lot of new stores over in the US and done some deals there, so that does seem to be the key read across for that sector. Adidas actually holding up pretty strong. They've kind of got their own story going on with the rebound from the Kanye West debacle, but as I say, some weakness in some of the European sports names following that slump once again from Nike yesterday. Then we're also looking at those skincare and beauty product stocks following that warning that we had out of L'Oreal. L'Oreal actually continuing to come down after a decline of around 3.5% late yesterday. Beiersdorf, the Nivea skincare company, and also Reckitt and Unilever holding up pretty steady at the moment. They did all see declines, with L'Oreal pointing to weakness, particularly in China, which is the weight on their sales at the moment. I'm surprised to see it coming down once again. I thought it might rebound, but we're coming down on that one. Going to take a quick look at defence. We haven't looked at this sector too much over the past few weeks, but there is more reports around the situation with Lebanon and Israel and Hezbollah, all of those headlines. So we're keeping an eye on that sector at the moment. Not too much of a movement in those, but potentially that will be a sentiment indicator for the geopolitics. Once again, keep an eye on that maybe next week as well. Going to quickly take a look at Delivery Hero. A decline of one of the worst performers in Europe today. Surprise CFO exit hitting the wire a few moments ago. They've appointed an internal candidate. There was a report of the CFO going to move to Wise in the UK before, but this does seem to be taking the market by surprise at the moment. As I say, they've appointed an internal CFO replacement. Got a bit of M&A to bring you as well. Keyword Studios. This is in the UK. They're being taken over by EQT, the private equity company. Keywords does design for computer games. It supplies into the big games like EA and also Take-Two. Those companies are its customers. That is being taken out. It has been spoken about for a while. The other big deal, of course, is Nokia buying Infinera in the US for around $2 billion, being taken positively for Nokia. They do need to see a bit of a growth rebound given the decline in the 5G infrastructure spending, so that a bit of a positive. And of course, the US company was rallying after market. We'll wait to see where that opens up. Double-digit gains for that one. Finally, just one morning call, really interesting one today. Air France is downgraded over at Barclays, and look at that. We got a 5% decline in the stock. They're citing the French political turmoil. They say that disruption could be seen in their revenue, given the social unrest potentially, and also it might disrupt the talks with trade unions around wages, which has been a key concern. Barclays no longer recommends buying Air France KLM because of the French election. As I say, that one getting hit in Paris, down 5% this morning.
Joe, thanks very much. Joe Easton from our equities team with a comprehensive rundown of all the stocks on the move this morning. Coming up, we'll get back to the French election story. 2 days until the first round of French elections, and government debt and the deficits are in focus for investors. We'll discuss the market impact next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
There are red lines. Sending ground troops is absolutely not requested, neither by Zelensky nor the Ukrainians. It's absolutely useless. President Macron proposed it, divided the Europeans, and worse, sent Putin some information he did not have, that Europeans are not prepared to send troops on the ground.
If Russia won over Ukraine, it would also be terrible for the daily lives of the French. Inflation would explode with the first cereal producer invading the second, energy bills would explode with more destabilization, and there would be a very significant wave of migration to Europe.
I won't let Russian imperialism absorb an allied state like Ukraine. So my position is simple. Supporting Ukraine to avoid an escalation with Russia, which is, I remind you, a nuclear power. If tomorrow I become prime minister, no French soldier will be sent to Ukrainian soil.
France's three main party leaders squaring off in the final television debate ahead of Sunday's first round vote. We got a little bit more insight on what this means for the debt picture. Joining us now, Anne-Laure Kiechel, founder and CEO of Global Sovereign Advisory. Anne-Laure, pleasure to have you on the program. Thank you so much for joining us this morning. Before we get into the nitty-gritty of some of these spending plans, I'm curious about the sovereign rating of French debt to begin with. We, of course, know we got that downgrade from S&P lately to a AA. What are the odds, in your view, of another downgrade, not just to a AA, but even to a single A? What does that potential look like?
Thank you very much for this. I think you're asking exactly the right question, because when a country is in the AAA zone or AA zone, it's roughly the same kind of like investors that you're targeting, even if your cost is higher. So sliding down to single A would be not good at all for France, and a change of paradigm with regards to debt. It's very true to say that France is close to this, but I think it can be avoided. It should be avoided. And it's a question of managing extremely well the finances, managing extremely well the consequences of whoever party is going to be elected and what they will do, and communicating this very clearly with market and rating agency. So there is a risk, but it can be avoided.
It can be avoided, but if you look at some of the policy agendas, even in terms of a coalition government from the left or from the right in France, there has been analysis from Allianz as just one example among many, many others who suggest that no matter who's in charge, the deficit will widen. In your view, is that a foregone conclusion?
No, it's not a foregone conclusion. It's true to say the deficit is extremely high and France is clearly really underperforming. It's also true to say that when deficit in France goes after 4%, it's bad because it then goes very quickly down, basically. So yes, again, there is a risk, but it can be contained. And also at the level of ratings that we currently have, meaning after the downgrade, we have room to maneuver in this rating category. So that's the reason why I think the single A is, of course, something that people need to be very careful about, but is not in sight, in my opinion.
Now, Laurie, if you think about another European country that looks like France in terms of its debt dynamics and its growth outlook, which country would it be?
Very interesting question, because actually none of the countries, because Greece, for example, is recovering. Italy, of course, has high debt, but has been overperforming France in a way. Spain has done extremely well, and it's very interesting to see, you were showing the graph of French debt. It's very interesting to see that actually Spain is trading extremely close to France. So it's a very particular case what France has. The growth is not that good. It's clearly better than Germany, but has underperformed South country. Deficit is, of course, very bad with regards to other countries. And when you look into the fundamentals of inflation, everyone is kind of like getting closer to the 2%, so it's reducing. So France is singling itself out in the economies.
How high would the spread between Germany and France have to go before you think we would be seriously worried? People are talking about 100 bips, maybe as being realistic, 120 maybe being possible. When do you think the market would probably should get nervous, should be worried? What would that number have to look like, do you think?
I'm not sure the market should get nervous because of this spread of delta. The reason why I'm saying this is that there are also technical reasons why this spread is increasing. Of course, it's the uncertainty related to France. That's very clear. But it's also because Germany has been less issuing than it has been in the past. So there is some technical element into this. However, you're right to say that 100 is a kind of like mark, right? And that people would kind of like pay attention if it's 100 or above. But I'm not sure that there is a specific number. I mean, it's much more the trend and it's much more the increase. So I guess what I'm saying is that if suddenly you are going from, let's say, 80 to 200, it's of course something that is very, very challenging. So, but obviously, the ECB would probably be intervening if there is that trend going on.
Anne-Laure, good morning. Bruno Le Maire likes to warn that France is in danger of a Liz Truss moment if certain other parties take charge in France. I don't think you agree with that, and you make the same point that a number of people have made, which is that the ECB will intervene. Just so I understand fully what that means, what would that intervention look like? Because when we had that famous Liz Truss moment, the Bank of England also intervened. So I wonder what it is that you think the ECB does in a French situation that sets it aside from what we saw in the UK.
Yes, thank you for the question on this, because the two situations are very different. First of all, in Europe, we already experienced spreads that went up. It was in particular the case of Italy, and in this particular case, the ECB intervened. What does it mean? It means that, and this was the question before, at a certain level of spread of delta, and in particular between Germany and in the case that it was Italy, there is intervention, meaning that ECB would help buying in the secondary market. And as a result, because you have more demand on the bonds, you have the spread that reduce. So it basically shows, again, confidence in the sector. So it has been done before. It has successfully worked. And it has yielded results with regards to having the spread go down. So I would say, as it was done before successfully, this gives more certainty that we can do it again if we needed to, if this happened on France.
Okay, so the difference is that there's previous, that this has happened before, I suppose, because in the UK also that the Bank of England stepped in, which of course is interesting. I wonder more broadly, when you look at the proposals that the different parties are setting out, Anne-Laure, which do you feel you have more understanding of? There's more detail around and you can fully evaluate. Is that the left or is that the RN?
The left has come with a very detailed proposal and early in the process. And Iran has been basically also dragging a little bit its feet when it comes to saying what they would do. And the numbers have been changing also because they've been changing their views, in particular with regards to pensions. So the most detailed is the program from the left. However, there are also some debate around how much it would cost. Same for the other program, Rassemblement National, and also same for the program of the current government. So the program of the current government is the less detailed because it basically says we will continue what we do with some small measures, but that doesn't really change the needle. You have a left program that is basically a Canadian moment, and that truly believes that this would put the economy back on track. It says it's fully funded, and it says it will bring growth. Hence, as a result, it will bring debt down. And Rassemblement National is basically saying, and having a lot of says that they will work on VAT. It will cost immediate substantial amounts of billions in the budget, but that's what I think is needed to restart the economy. But that's one of the measures that they've kind of like have put a number on. The rest is much less detailed.
Well, Anne-Laure, I want to follow up on what Anna just talked about when it comes to the ECB and what role that may play. In the last 24 hours, Christian Lindner, the German finance minister, said it would be illegal for the ECB to intervene in some way when it comes to French yields. But what would that intervention even look like?
So you're right. Intervention needs to be precise. So what the ECB does, and as I mentioned in the Italian case, it has been done in the past, is that when delta of spreads between a given country and in particular Germany, but it's not always only Germany, can be other country, when it diverges too much, because we are a monetary zone, it needs to be intervening and making sure that there is no debt crisis. So as a result, what it does is that it helps the liquidity in the secondary market, and what it does is that it helps bring debt down. So there sometimes is a confusion around intervention or things that are done in the primary market versus in the secondary market. So I guess what he was referring to was probably something that kind of like has an impact on the monetary policy, which indeed Germany has very strong view about. But you can intervene and you can do and help in the secondary market, which has been done in the past and would probably be, but if this is the case, but I personally don't believe it will be the case because I think it's still completely manageable around French debt. It's just a question of doing the job properly and talking to the market properly after the elections.
It's going to be interesting, though, isn't it, to watch it. Anne-Laure Kiechel, founder and CEO of the Global Sovereign Advisory, thank you very much indeed. Of course, don't miss Bloomberg's coverage on Monday of the results from the first round of those French elections. We've got some great coverage and some great guests coming up. Coming up, we're going to talk about something that's related, very related to this. EU leaders nominating Ursula von der Leyen for a second term as Commission head. We're going to discuss the challenges facing the bloc over the coming years. French politics, one factor in that mix. We're going to talk about this next. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Markets Today, 30 minutes into a European trading day that shows European stocks moving higher. The FTSE 100 up by 0.4%. The CAC 40 is a real underperformer, down by 0.3%. So we'll continue to watch French assets, of course, as we head towards the first round of the election that takes place on Sunday of this weekend. We'll be back on Monday with analysis. Now, on to more immediate European politics. European Union leaders have nominated Ursula von der Leyen for a second term as president of the bloc's executive arm. Let's get more details from Bloomberg's Oliver Crook joining us once again from Brussels. Oliver, the top 3 jobs, they're now confirmed by leaders. It took some time. It took longer than expected, perhaps, over a couple of meetings. It isn't all over yet, though, I'm told. What's the story?
Yeah, that's right, Anna. So the top 3 jobs, we should just run through them quickly again, is Ursula von der Leyen reappointed for the Commission President, Kaja Kallas to run foreign policy, and of course Antonio Costa to run the European, the Council of Europe here. And these are sort of the main top jobs from which everything will trickle down and emanate. So it was really important for leaders to get this done, though this is not the end of the path. And we should say that there are some significant figures here in Brussels that were not too pleased about the outcome, namely the Italian Prime Minister, Giorgia Meloni. Have a listen to what she had to say at about 1 a.m. last night.
I do not support, and I have never supported, this agreement. Just as I announced yesterday in Parliament, I think this is a big mistake, and I find it disrespectful towards European citizens and their vote. I believe I respect the will of European citizens by not supporting this deal.
And so Italy, one of the biggest members of the EU, one of the founding members, abstained from supporting Ursula von der Leyen. Giorgia Meloni, Viktor Orban, for his part, voted against it. So these are some of the contentions that we have within this deal. And it's important because we throw this forward to the parliamentary vote that's happening in about 2 weeks' time here, in which VDL needs to get more than half of the MEPs to vote in favor of her in order for her to get that job. That would have been a lot easier if she had the support of Giorgia Meloni in the ECR. Now it goes down a bit to the wire. Last time, remember, she only won by 9 votes, the slimmest margin in history.
How weak is Emmanuel Macron now versus how strong he was before? How much of a difference is this election making to his standing in the room, Ollie?
I think it's making a very large difference. I mean, take one of the main issues that sort of Macron has stood for within the sort of debate here in Brussels, joint debt around defense. That has basically been off the table for this leaders meeting. This is not something that they really felt that they could even begin to talk about, in part because of how weak France is. We also know last night that at the last sort of minute, France and Germany came to the table. They wanted to make a number of amendments to this sort of strategic outline of the sort of European Union, what they call the strategic agenda, which is really the blueprint for what the EU wants to push forward in the next 5 years. If France and Germany come to the table with some amendments, traditionally speaking, that is something that member states listen to. In this case, not. They batted it away. They say, we don't want to take this into consideration. And basically, none of those amendments got through, really highlighting how important sort of domestic politics are right now in the EU. The question for Meloni is, how do you translate that power within her own nation into the EU level? That is what we're going to be finding out, particularly as Viktor Orban in Hungary take the EU presidency on July the 1st with the new slogan, Make Europe Great Again.
Oh boy, Bloomberg's Oliver Cook in Brussels. We thank you so much. And kind of ending on the perfect note, because of course this is coming at the same time that we're coming fresh off of the heels of the U.S., the first presidential debate in the U.S., of course, hosted by CNN, President Trump versus President Biden. Let's just bring in an expert on foreign policy, on international affairs. Mark Champion for Bloomberg Opinion joins us on set. Your initial take on the debate?
It was kind of shocking, to be honest, especially the first part of the debate. It confirmed the strongest attack lines of the Trump campaign, which are that President Biden is too old to be president. I think it's very difficult to come back from.
You think it's difficult to come back from? So that sparks a conversation about how the Democrats respond, Mark, and a lot of different views about whether it's too late to find somebody else or whether that really is within the thinking and the gift of the Democratic Party at this point.
Well, I mean, obviously it would be extremely difficult, you know, for a whole range of reasons, including the fact that Biden himself would have to agree to make that decision. And it is very late in the game. But you know, there is it's certain the possibility exists that you have an open convention and other candidates put forward, and he steps down. You then have very little time, you know, to build that person up to beat Trump. But they may make the calculation that you know, they can't come back from this, and if they can't, there is not a great deal to lose.
So if you're sitting in a European capital this morning, you're thinking, I'm going to be dealing with a second Trump presidency. Is Europe ready, given the turmoil that exists here, for that? How should we be thinking about it? Is it a commission that we're building to deal with that? Is it a setup that is Brussels going to be ready for that? Is that the framework in which we should now think about European politics?
Yeah, I mean, you have had various, European politicians come out, in recent months to say, look, it's not like last time. We know what's coming. We're ready. I think that's a bit of a delusion, to be honest, because the difference between the preparation of the Trump administration last time, when they had none, and this time when they will, they've had a lot of time to prepare. They've got everything sort of worked out, including personnel, policy, and so on, is going to be very stark.
What does it mean for defence spending? It was clear, one of the things that did come out of last night was that there is a clear emphasis on defence spending. First, Ursula von der Leyen was talking about the need for Europe to do more. How is that going to work? How big does that number need to be? If we were to see a Trump presidency, how big does that number need to be? What does Europe have to deliver were we to see that Trump presidency coming through? And you fold in the Ukrainian angle into that, again, that number potentially just gets even larger than we were originally thinking about.
I think that's true. I mean, I think there's no question that he will come in demanding again that a lot more is done. There are still a number of countries that don't meet the 2% target. I expect that he will up the ante also, and it will no longer be about 2%. It will be more, perhaps saying you have to match what the US spends, which is over 3%. Obviously, that sort of changes the whole game. But that is part of a negotiation. Even Trump can't expect that overnight, Germany will add 2% of its GDP to defense spending. It's kind of physically impossible and undesirable. But that will set the tone, as it did last time, and allow him to, make demands, other demands. I think the actual numbers, those still, always were and still are set by Vladimir Putin and his actions in Ukraine and elsewhere, rather than Trump. That is kind of, more about his politicking and about him, mixing it in to make demands of the Europeans, to leverage in other areas like trade, And just really to, as his former National Security Advisor Robert O'Brien said in a Foreign Affairs article recently, he would come back trying to show an America that works through strength and also unpredictability.
So I have a slightly left field question in that in one of the debate conversations was around China, though maybe one of the few times in the debate that was mentioned around China, where President Trump himself pointed out that Joe Biden hasn't changed much of the tariff policy during his administration. It's something Biden's critics have pointed out as well, that he campaigned on a softer or a better relationship with China, and it led to things like, symbolically, even getting our pandas removed from the Smithsonian and now reinstated as just one example of what that relationship looks like. Taking a step back, though, there is this broader trend of the last 3 presidents we have, going back to the Obama administration, I would argue even if you want to throw in Bush in there as well, of America pulling out of foreign affairs, whether it's getting involved in wars, funding various areas. I'm curious about whether that trend, if it's ongoing, of almost deglobalization and fragmentation, increases the chances for more hot war zones in places like the South China Sea.
Yeah, it's a really good question. I think, absolutely there is this trend, and that exists regardless of whether Trump comes to office or not, of U.S. withdrawal from, the U.S. was a literally global power. Yeah. So U.S. withdrawal from various areas. I don't think that impacts the competition with China and in the South China Sea. I think that, again, is a kind of cross-party consensus issue that China is the primary competitor to the U.S. I think the difference for Trump when he comes back this time, which he may not really have got his head around, his advisors may not have, is that, 4 years ago, the China, Russia, Iran, North Korea axis was really not extant in the same way that it is now. And so if, his goal, the sort of China first, idea in Washington is always that we need to focus on China, we'll park Russia, we'll park, these other issues. Now these things are glued together because of this axis, and it makes it, rather difficult to play. They won't be played in that way, essentially. And Trump won't be able to do that either. So it's quite, it'll be a different situation than when he was here last time.
Mark, thank you very much. Thanks for joining us this morning. Mark Champion, who covers international affairs for Bloomberg Opinion. Coming up on the programme, we'll turn to French politics once again. We'll discuss markets with a focus on France as we enter the last days of campaigning before Sunday's election. That's next. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have 2 assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
They're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is unprecedented territory in French politics.
Even if the National Rally makes it into government, it's going to be a two-headed France because the President Macron, will still be there.
The fact that Macron is extremely weakened, whatever exactly happens, so I think this is one of the few certainties that we have at this stage. That is pretty bad news for the EU.
We're already seeing that in Brussels. Is France diminishing both reputation but also influence?
Whoever will be in power will be constrained, in my view, by how the financial markets react.
We see that the electoral pledges of both far right or far left are evolving. So they do backtrack on some of their pledges, but we do still see fiscal slippage ahead.
Rational people will prevail ultimately, because the closer we get to the elections, the less buzz and the more fundamental votes. And in any event, after the 8th of July, things will stabilize in a much more clearer environment.
So I guess talking about the lead up to the first round of the French election, that takes place this weekend. Financial markets largely appear to be comfortable with the idea that we get a hung parliament. That's what the polls predict at the moment. The markets seem to therefore be comfortable with that idea, at least. I say comfortable, they can manage that idea. There's also this hope that maybe if we do see the right winning, that Jordan Bardella will be more like Giorgia Meloni and will accept some of the conditionality that the market will impose upon it and will actually deliver a much more centrist policy than maybe originally anticipated. Is that what we should be expecting? Lorenzo Codogno, visiting professor in practice at the European Institute at the London School of Economics, has a great deal of history of analysing what happens in Europe, its politics and its economics. Lorenzo, fantastic to speak with you this morning. Should that be our base case? Do you think the market is right in assessing that actually the National Rally would probably be more like a Giorgia Meloni-style government that would actually, in some ways, toe the economic line and would accept the conditionality that the market imposes? Is that what you see happening here?
Well, first of all, my take is that the French elections are still pretty much open. In other words, you don't know what you're going to get after the first round, because people might behave strategically and change their vote in the second round, depending how it goes in the first round. So I think it's pretty much uncertain, the outcome at this stage. If it is an hung parliament, I think it might be problematic. Not only for France, because it would be a stalemate for at least a couple of years, but for European politics as well, because if the French engine of European integration no longer works, then it could be a problem for any initiative in the future. So I think that needs to be taken into the big picture. Now, is Bardella similar to Meloni? I don't know. It is still to be seen, but at least on two counts, I would be concerned, because the National Rally in France has been against NATO in the past, and certainly not a very constructive attitude towards Europe. Meloni is strongly backing NATO alliance and the support to Ukraine, and has become much more constructive in terms of European developments. So unless we see a surprising shift by National Rally, I would be more concerned about National Rally in France than Meloni in Italy.
You talk about the EU implications, the European implications, Lorenzo. Is joint debt, is joint funding of defence possible given what is happening in France right now and the expected outcome of this election, which I appreciate is very difficult to call, but do you think that is going to be difficult to achieve? There is this hope in Brussels that we can see the Next Generation Fund being replicated in other areas. How possible do you think that is?
I think the Next Generation EU was a one-off initiative, a successful one, but very difficult to repeat, if only for legal reasons. However, there is certainly a very strong drive to find new initiatives to drive the European integration forward. Defense is at the forefront of this. There is clearly a need, and it is obvious to everyone, there is a need to kind of make it homogeneous, the kind of defense and security policy throughout Europe. So I think the need will not go away. The process will probably continue, but might suffer in the near term, because clearly, if there are countries that are not fully united and fully backing this process, the process might be delayed and might have to wait for events to push for that kind of solution.
Professor Codogno, good morning. Just picking up on what you said about Bardella and Meloni and the lack of comparison, or the ways you think that they are different around NATO views and views around the European Union and Ukraine. Were Meloni's views always as they are now? Were her party's views always as they are now? I'm just thinking about the way that sometimes views moderate when you're closer to power, sometimes they don't. And I wonder what expectations we have on that front when it comes to the RN.
I mean, you are absolutely right. When you get into power, things change, and you have to kind of shift to a more pragmatic approach. I think in the case of Meloni, that happened in day one, basically, effectively, okay? So that is reassuring. So maybe there is the same situation in France, but there is no guarantee, in my view, especially because if there is a hung parliament in France, National Rally will have to send some signals to their voters in order to prepare for the next presidential elections. And the only way to do that would be to kind of stick to some of the mottos in the electoral campaign, and so therefore it might be more difficult for the National Rally in a situation of a hung parliament to shift to a more mainstream position on very touchy issues such as support to Ukraine or common debt for defense spending.
Lorenzo, we're seeing the rise of the right, as we've been discussing, in some parts of Europe, notably not everywhere, but certainly in some parts of Europe. I wonder how a Europe that looks like that should think about a Trump presidency 2.0. What should Europe be doing with Europe as it is now? What should Europe be doing to prepare for the possibility of Trump returning as president?
This is a very good question, because clearly it will be the question in financial markets over the next few months. How would Europe respond to a completely different U.S. administration? And I think there are no clear answers at the moment. I think to some extent it is reassuring that at least there is some continuity in the Commission and in European institutions, that after the European election, things have not changed dramatically. So basically, broadly speaking, there will be the same kind of political forces supporting policy initiatives in the future. But still, Europe is more divided, more fragmented, and that might be a weakness in the future, and might be a weakness in the potential response to any future event.
Thus squaring the political, and to your point, it is uncertain, but the policy agendas of the last two presidents have almost, at least on the international front, looked quite similar. Lorenzo, let's talk a little bit about the economics here. There are deficit questions on both sides of the Atlantic, and the states starting in January 2025 with whoever is elected to this next term, but then also in France and the UK as well. How does that show up? How big of a concern is that?
I think it is a concern. I mean, financial markets are pretty relaxed at the moment. Risk premia are pretty low throughout the developed world and also in emerging markets. I think there is a possibility, which is not very high, but it's something that the investors should not forget, of a sort of debasing of the U.S. currency if the new Trump administration decides to go for big spending. And that undermines the confidence on the U.S. currency. I think it's not a high probability, okay? I think the U.S. dollar is still the global reserve currency, and this is unlikely to change in the near term. But don't give everything for granted, because even the U.S. debt needs to be bought by someone in the future, and investors might be less inclined to do so. Moving to Europe, I think UK elections are a source of uncertainty as well. Certainly for the potential policy of the new Labour government, but is less of a concern right now, I would say. The stability of the EU situation is more concerning, because clearly you need a united Europe in a situation in which you have so high global uncertainty, and you need a Europe that is united in terms of policy initiatives and ability to respond to any unexpected events that might happen in the future.
All right, Lorenzo Codogno, visiting professor in practice at the European Institute of the London School of Economics. We thank you so much for talking to us about the economics on both sides of the Atlantic. Now, on Monday, you do not want to miss Bloomberg's coverage of the results from the first round of those French legislative elections. We're going to be talking about the ramp up to, of course, the second round as well, the results from over the weekend, and the ramp up to the UK as well. There's plenty to digest, as well as our brand new show.
The big news.
The real highlight of the weekend, which is our brand new show. New desk, new set.
Yes.
New
graphics.
New life.
We'll still have all the familiar faces who come and join the team often to come and talk about markets and geopolitics and the like.
We've got some great guests on the first week.
We do.
We've got some really good guests to talk. Monday morning is going to be really exciting. I couldn't think of a more perfect way to start the show in terms of the news flow. We're coming off the back of the French election.
Yes.
So much to talk. I think there'll be news potentially over the weekend out of the United States. Lots of things are going to be happening Monday morning.
To Lorenzo's point, it will be a little bit, well, it'll be made even more exciting by the fact that the outcome of round one of the French election, you don't get a winner at that point.
No.
So looking to...
You might get a loser.
You might get a loser. You might have people doing better or worse than expected, apparently.
One thing, do you know what also we're going to do on Monday morning is we're going to have better mics, and we're going to make sure that the microphones are actually working. We will fix that on Monday morning. But the new show launch, we've got a whole series of new shows coming out on Monday, so it's going to be great to see the improved Bloomberg coverage. It's maybe some style over substance, because I think we are the substance. Maybe that's going to be good. But it's nice to see some style.
It is breakfast table conversation. What you need to know to kick off your day. What you need to know going into the market open. And of course, we have a great slew of reporters from around the world who will be joining us. The guest lineup, and of course, a big thank you to our producers as well for putting it all together.
We will be doing that on Monday morning. It's going to be fantastic. Tom's show's going to have a new launch. Fran's show's going to have a new launch as well.
We're shaking things up.
It's going to be fantastic. Make sure you tune in on Monday morning. That's it for us on this show. This is Bloomberg.
and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. Happy Friday, June the 28th. I'm Tom McKenzie here in London. Here's what's coming up on today's programme.
We created 15,000 new jobs. We brought on the position where we have 800,000 new manufacturing jobs, but there's more to be done. There's more to be done.
The only jobs he created are for illegal immigrants and bounce-back jobs, a bounce-back from the COVID. He has not done a good job. He's done a poor job.
Democrats express alarm at Joe Biden's performance in the first presidential debate, fanning concerns about his age. Meanwhile, Donald Trump brings energy as well as falsehoods and exaggerations. European stocks climb along with US futures ahead of the Fed's preferred measure of inflation due later today. Plus, European leaders nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. So yes, European stocks are posting modest gains after 3 days of losses. The French markets, though, solidly in negative territory as we lead up to the first round of voting in that parliamentary election on Sunday, with the national rally of Marine Le Pen still polling in first place. Gains coming through here in the UK, a bit of a pickup in terms of the commodity story. On a sector-by-sector basis, you have autos and basic resources at the top of your sector list. In the red lane, though, you can put L'Oreal, and that is dragging down consumer products, given challenges in the China exposure for that company. S&P futures currently pointed to gains of 0.2% as we expect that PCE price indicator out of the US to edge lower for the month of May to 2.6%. That would be the lowest print that we've seen since around March of 2021. US futures, as we mentioned, pointed to gains. The Nasdaq futures pointing up by 66 points. Let's flip the board and look cross-asset then. You had a bit of a rally in terms of treasuries yesterday on the back of some softer cooling data out of the US on the economy there. 429 though today, currently flat on the benchmark. 328 is where we're looking in terms of the French 10-year, and of course the spread above 80 basis points versus German bunds, and we will continue to monitor the risk premium for French debt and French equities as well, leading into that vote, of course, on Sunday, and then on the back of it. Euro dollar at 106, a little bit of softness coming through, down a tenth of a percent, largely down to the stronger dollar, and that was partly down to what was happening in terms of the presidential debate, the dollar gaining, and expectations from some, at least in these markets, that was a win that came through for former President Trump, and possibly that could signal stronger US dollar in focus. Talking of which, let's unpack that debate then. President Joe Biden stumbling through exchanges in the first presidential debate of this cycle, a performance that risks exacerbating concerns among Democrats about their candidate's ability to defeat Republican Donald Trump in November's election.
Making sure that we continue to strengthen our healthcare system, making sure that we're able to make every single solitary person eligible for what I've been able to do with with the COVID, excuse me, with dealing with everything we have to do with, look, if we finally beat Medicare.
The only jobs he created are for illegal immigrants and bounce-back jobs, a bounce-back from the COVID. He has not done a good job. He's done a poor job, and inflation's killing our country. It is absolutely killing us.
Okay, let's bring in Bloomberg's Kriti Gupta, who watched that debate for us. We see the stumbling there from the current President Joe Biden, but also the mistruths, as we said, the exaggeration coming through from former President Trump. Talk to us, we'll get into the substance, but talk to us about the style, the concern within Democrats on the back of this debate, Biden not performing as many would have hoped.
So there was a high bar for both candidates, and for Biden, it was he needed to physically and mentally show that he was not only competent, but he could endure standing for 90 minutes without any sort of hiccups. Clearly from that shot, that was not achieved. On the other hand, President Trump also had something to prove in that in his last debate, he was criticized for being argumentative, interrupting, and of course going over his time, something that the debate moderators tried to address with things like muted microphones. And even with that, President Biden actually went over his time more and had to use the muted microphones on him more than President Trump did. All in all, it came out and looking like President Biden just wasn't able to show up to the opportunity. And on the back of it, now reports coming out that the Democratic Party is actively concerned about their representation this election cycle.
And possibly considering as well a different candidate with all the complexities that might go into that. And maybe that's going to be a short-lived mood within the Democratic Party. They have the September debate as well, and plenty more before that. In terms of the substance, where and what stood out to you from what we heard from the two candidates, particularly when it comes to the economy of the US and national security, issues like Ukraine?
Well, I'll start with the economy of the U.S. The very first thing on the new president's docket is going to be the deficit issue. January 2025, they have to deal with that, and that is going to be a big concern. Now, the way that they deal with that couldn't be more different. Tax cuts and hikes are going to be very top of that agenda. Joe Biden, for example, talking about funding that deficit gap, narrowing that gap by actually increasing wealth taxes on the wealthy, making over $400,000, say they need to be paying their fair share, and then having longer-term plans like chip manufacturing, drug pricing, extending the parts of his policy that are already in play. On President Trump's side of the equation, you have the exact opposite, talking about tax cuts to stimulate the economy, but then also using that as encouragement for corporations like Apple, which is a company that he named, to repatriate some of the funds, in addition to loosening some of the regulations around things like oil and gas, for example. Tariffs, of course, also coming a part of that conversation. The tougher you go on China, Trump claims, the easier the deficit will get.
Kriti Gupta, thank you very much indeed. Anchor, of course, for Markets Today, with the detail on that presidential debate and the implications in terms of the policy and the style as well. Let's bring in at this point Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs, for a view on the market implications, the political risk more generally. And Peter, I'll start with you on this question. Are you starting to see, do you expect to see risk premium being priced into US assets as we lead up to that November vote? How do you expect equity markets to adjust to the elections of the US?
Well, Tom, I think the context here is important. Everybody's known that this is the year of elections, the largest number of people in history voting. But the markets really found it very difficult to pin anything on that. You know, what would be the economic or indeed the market-moving implications? And what we've seen unusually is very low volatility and rising risk assets. But we're really now starting to see this debate becoming front and central. We've already seen some surprising outcomes in elections this year, Mexico, India, others, and of course the early election called in France, the UK, and what we're seeing now in the US. So I think the focus is very much now on politics, and I think we're starting to see that in slightly higher volatility. Our own risk appetite indicator, for example, which was at very elevated levels until recently, has started to fade. I think that's all part of this issue now becoming a real central focus for investors.
Okay, so maybe a tick up in volatility around some of this. And we'll bring you onto the European space and the views around the political risk in France. But before we do, one more on the US. There does seem to be a view coming through. You can take the view that whoever is in office, tariffs are going to be a central tool and remain a central tool, and the dislocation of these supply chains. What is your advice to those looking across their portfolio, looking to tariff-proof their portfolio?
Well, it's interesting, actually. What we've seen in places like Europe is internationally exposed companies doing rather better, but those companies which have production or facilities already in the US, so they're somewhat protected potentially from tariffs. And actually more domestically exposed things have done better in the US on the basis that they'll get further support as these developments unfold. But I think this is a reflection of some larger structural changes which investors are having to grapple with as well. You know, we've seen a period of uninterrupted globalization for many, many years, coupled with extremely low interest rates and very, very low trade barriers. And in recent past, of course, trade barriers have increased. We're likely to see more. We are seeing a bit more fracturing of the globalized model, more localization, regionalization. And this also feeds through, I think, into issues like high government debt and therefore higher, longer-term interest rates, at least relative to what we've been used to in the last decade. And that all, I think, supports strong balance sheet, high-quality companies that have production facilities in places like the US.
Okay, well, that takes us also to some extent to what's happening in terms of European conglomerates as well. I was speaking to JP Morgan's Karen Ward yesterday. She says she thinks that European markets have oversold on the French political risk. She's seeing opportunities, for example, on French banks. I said, would you be buying? She said, yes. Would you agree with that? Are you looking at opportunities given the sell-off that we've seen?
Yes, I think two things I would say. First of all, you know, the French market has been hit more than the rest of Europe. And this hasn't, as yet, represented itself in anything like the sort of systemic type of risk that we were seeing, for example, during the sovereign debt crisis. I mean, French banks have been hit. Domestic stocks in France have been hit quite hard as the risk premium has gone up. But Italian banks, for example, are up 30–35% year to date. And actually, the banking sector's the best or the second best performing sector in Europe. We like the banks because they have strong balance sheets, they're cash generative, they're paying dividends, and buying back stock. And some of this, I think, is oversold. It's also just worth mentioning that in France, if you look at the CAC 40 index, only 15% of the revenues of that index are domestically exposed in France. So it is a very global index of companies. Like many of those in Europe, it's dominated by very global companies.
And in terms of hedging for political risk, you flagged one sector that comes top of mind for you, which is healthcare. What are the hedging characteristics of healthcare?
Well, healthcare, I think, is interesting on two fronts. First of all, it is a relatively defensive sector in the sense that it's less sensitive to changes in economic activity or indeed interest rates. And in that sense, I think it's attractive. But also, I think it's potentially structurally attractive as a major beneficiary of AI. Now, we've seen a huge amount of attention on AI for good reason. But if you look at industries which can adopt and utilize these technologies to improve productivity, drug discovery, new products, I think that's one that we would find interesting.
Policymakers and others suggesting that AI is going to have a catalytic effect here in the UK as well in terms of productivity. We've seen some economic data out today out of the UK suggesting it's a little bit more robust than maybe some had expected. The first quarter, 0.7%. Your views on the UK then? Does the UK become... We have our own elections, of course, this time next week, on Thursday of next week, but different dynamics at play. Does the UK become something of a haven? How do UK assets perform in this environment?
Well, I think two things worth saying here. Firstly, the UK has had a very unusual period of political volatility in the last decade relative to at least its longer-term history. And it looks as if you've got more centrist policies and quite significant on either side of the main contesters for the election, very similar fiscal plans, or at least fiscal constraints. The market sees that as relatively benign in terms of potential shocks. But also, UK assets are very cheap.
The markets are right to see that as well?
Yes, I think that's right. Certainly in the context of some of the things that we're hearing and learning about in other markets.
As a result, do you see a pickup in flows into UK
yes,
assets?
and certainly interest. You know, the UK market is very cheap, I think. You know, it trades roughly at about half the PE ratio of the US, the biggest discount we've seen in around 30 or 40 years. Now, some of that, of course, reflects the fact that it has very different exposure in the index relative to the US. But even if you adjust for that, it looks very cheap. It's a very cash-generative index. If you look at the free cash flow yield, it's pretty much the highest of any major market in the world. Companies are paying decent dividends. And there's a lot of, I think, attractively valued companies. Part of the problem is the lack of domestic support and liquidity, less exposure in equities of pension funds and insurance companies. But nonetheless, I think there's arbitrage opportunities in the UK. We're finding a lot of investors are actually really quite interested in it.
Very interesting. Peter Oppenheimer, thank you very much indeed. Chief Global Equity Strategist at Goldman Sachs, on how to position in this politically volatile environment, possibly less volatile here in the UK. Coming up, talking of politics and volatility, EU leaders backing Ursula von der Leyen to stay on as Commission head. Not a big surprise there, but the horse trading behind the scenes has been pretty fascinating. More on that deal next. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg.
Welcome back. Investors remain on edge ahead of parliamentary elections in France. This is the country's three main party leaders squared off in the final television debate ahead of Sunday's first round vote. Let's get more from Bloomberg's opinion writer Lionel Laurent in Paris. Lionel, talk to us about the debate, what came through for you, and how we should be thinking about this first round vote on Sunday.
So this has been a very short campaign, not really enough time to get into policies, and given that we had a first debate only 2 days ago, I don't think the debate itself really is much of a game changer. I think Macron's party would have had to pull a huge rabbit out of the hat, and even though it was definitely feistier against Bardella, who's Le Pen's number 2, it's Le Pen's party that's still the one to beat, and their lead is widening. The more that they kind of try and drop their most toxic policies, their lead keeps going up. So I think that tells you that actually we still see exactly the same positioning that the polls predict. Le Pen's party is the one that's top, and it's the one to beat, and it's probably not going to get beaten.
And then, briefly, we move on, of course, to the second round. How much political volatility is there between the first round and the second round, typically in France?
Well, this is totally uncharted territory. This is why you have to be very careful. It's the first time we'll have the incumbent or the establishment in third position, and the far right and the far left and left bloc in number 1 and number 2. The problem is if you're in third place, you're in the worst position. So I think that's why you should be cautious, but really expect potentially the far right to do even better than we think, getting a high majority and maybe even an absolute majority because there doesn't seem to be much appetite for a proper Republican front where everybody rushes out and votes for whoever is opposed to the far right.
Okay, Bloomberg Opinions, Léonard Laurent with a preview of that really crucial parliamentary vote coming through on Sunday, of course, for France. Thank you. More broadly across Europe, the European Union and its leaders have nominated Ursula von der Leyen for a second term as president of the bloc's executive arm. Let's get more from Bloomberg's Oliver Crook. Ollie, the top three jobs now confirmed by the leaders within the EU, but it's not over yet.
Yeah, Tom, this was pretty well advertised, so maybe not too many shocks there, but there was some pretty interesting things happening under the surface. So just to recap, Ursula von der Leyen basically re-elected, endorsed by the member states in order to take another 5 years as the Commission president, Kaja Kallas to take the foreign policy role, and then Antonio Costa to take the the Council of the European Union. Now, these are important jobs to get nailed down because from this, all of the other portfolios sort of emanate going downwards. And so this was sort of a victory lap for the center that is sort of held within Europe. Others were not as pleased about it, such as the leader of the ECR party, now the third biggest party in parliament, and we know Giorgia Meloni, the leader of Italy. Have a listen.
I do not support, and I have never supported this agreement. Just as I announced yesterday in Parliament, I think this is a big mistake, and I find it disrespectful towards European citizens and their vote. I believe I respect the will of European citizens by not supporting this deal.
Non sostenendo questa proposta. And so Meloni abstained from the vote. Viktor Orban, for once, voted against von der Leyen. So you have sort of a flavor of how some of these national politics are now sort of playing out on the EU stage. If you think about kind of where Meloni's left her options open by abstaining, maybe supporting her, von der Leyen still needs to get through the MEPs, the European Parliament, more than half of those votes. Without Meloni's support, that becomes a razor-thin margin. She only won by 9 votes last time. It gets more complicated this time. And when you think of the national politics playing out also for the French and the Germans, who tried to sort of change the policy agenda late last night, and basically the other member states said no way, really illustrating how the two most sort of powerful countries within Europe have really lost their clout since the EU election and really sort of lost that sort of domestic support.
Bloomberg's Oliver Crook on the ground for us in Brussels on how the domestic politics of countries like France, Germany and Italy are feeding in to a changed dynamic at the EU level. Ollie, thank you. Plenty more coming up. Stay with us. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to some of the other top stories on the Bloomberg terminal this Friday. Ukrainian President Volodymyr Zelensky has signed a long-term security commitment with the European Union. The deal formalises EU initiatives to support the war-torn country, including arms deliveries and training Ukrainian troops. Polls open later Friday in Iran's presidential election to select the replacement for Ibrahim Raisi, who was killed last month in a helicopter crash. Two of the most conservative candidates have stepped aside ahead of the vote, strengthening the chances of two other hardliners. And Delhi Airport has suspended all flights from Terminal 1 after a part of the forecourt's canopy collapsed early this morning following heavy rain. Delhi Fire Services says one person died and another 7 people were injured in the incident. Switching focus, and let's check in on a corporate story of the moment. Nike coming through with an earnings update that disappointed the markets, and you can see pre-market that stock is down 14%. We've seen the read across to European retailers like Adidas. They've been challenged in terms of the lineup and demand for their shoes, and particularly as well how the Chinese market has been a concern for Nike. And you can see pre-market then that stock down 14%, but there is a broader read across from that story within the sector. Let's quickly look as well at a deal that's come through for the telecoms equipment maker Nokia, one of its biggest deals, in fact the biggest deal since it took over Alcatel-Lucent, paying and coming through the deal around $2.3 billion for Infinera. That's a US-based company in pre-market. That stock rallying more than 19%. Coming up, more on the UK elections. That is next. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Democrats express alarm at Joe Biden's performance in the first presidential debate, fanning concerns about his age. Meanwhile, Donald Trump brings energy as well as falsehoods and exaggerations. European stocks climb, along with US futures, ahead of the Fed's preferred measure of inflation due later today. Plus, European leaders nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. Good morning and welcome to The Pulse. Happy Friday, June the 28th. I'm Tom McKenzie here at our European headquarters in London, checking in on the markets for you. As we have mentioned, European stocks eking out some gains after 3 days of losses. S&P futures also in positive territory, nosing higher by 0.3% ahead of that price gauge. The PCE index, crucial, of course, in terms of the way the Fed is thinking about the evolution of inflation in that country, expected to come in at 2.6% in terms of core. And to what extent does that tie into expectations around the first Fed cut, with markets now pricing in about 45 basis points of cuts by the end of this year? Cross asset 430 on the US benchmark 10-year yields, just up 1 basis point. There was a move into treasuries yesterday on the back of some economic data that showed a bit of cooling in terms of the US economy. In France, we continue, of course, to adjust the risk premium as we lead up to that first parliamentary vote on Sunday. 329 on the benchmark 10-year, and the spread over German Bund still plus 80 basis points. 106 on the single currency, currently a little softer by 0.1%, and that is largely down to dollar strength. Now, JP Morgan is adding Indian government bonds to its emerging markets index. The move set up India to lure billions of dollars in extra inflows and open up a $1.7 trillion market to a broader range of investors. Global funds have already poured close to $11 billion into index-eligible bonds since JP Morgan's announcement in September. Staying with the region, let's discuss the green investment outlook now for India with the country's largest renewable energy company, Renew. CEO Sumant Sinha joining me now on set. Sumant, thanks so much for coming in, and welcome, of course, to the studio. Really appreciate it. Let's talk about we've been talking about the politics of France, the UK, and the US, of course, today. But the politics of India, we're still working through the ramifications of that. The surprise lack of a significant majority for President Modi, Prime Minister Modi, I should say. Is there a political risk now as you look ahead in the months and quarters ahead for your business? Is there less policy certainty than there was a couple of months ago for you in the business in India?
No, I don't think so, Tom. I think the elections were, of course, fairly long drawn out, but the result was something that was a little bit preordained. Of course, people didn't expect the Prime Minister to lose his absolute majority, but nevertheless, with allies, he's pretty strongly in the saddle right now. And I think that is reflected in the cabinet that he's chosen, which is very similar to the cabinet that he had earlier, with most of the same ministers holding the same portfolios. And I think the clear signal to all of us in the business community from the government is that this is going to be business as usual, and the same policies will continue. And that, as you know, for businesses like ours is very good to hear, because we make long-term investments, and that policy predictability and continuity is very important. So, frankly, I don't see that there's going to be any significant change from the last government to this government. The Prime Minister is the same. The policies are going to remain.
Interesting. Okay, so you're confident that you get policy certainty, and as you say, crucial in your sector where you're making those long-term investments. How do you see, what are the policies that you're expecting and looking for that may adjust the environment for your sector? How does the renewable sector in India adjust in the years ahead?
Yeah, look, I think the government's target has been always very clear that we want to get to 500 gigawatts of renewable installed capacity by 2030. And
is that still achievable?
I think it is. So look, the reality is that India's power demand is growing very, very significantly. The economy itself, as you know, is growing very significantly. And the government has taken one fundamental policy decision, and that is that all new power demand growth should be met from renewable energy capacity. And that will require us to add almost 70 to 75 gigawatts of new renewables just to meet the power demand growth. Now, there's a very strong commercial reason for it as well, which is that renewables is cheaper than the alternative, which is coal-based power. So it's both in India's economic as well as climate interest to essentially add as much renewables as possible going forward from here. And so we have to achieve the target of 50 gigawatts at the very least.
Yeah, okay, so 500 gigawatts is the target by 2030, but on an annual basis, missing it so far. You're confident you get there by 2030. What have been the headwinds to the installation, the progress around installation?
Yeah, so I agree with you that we've been adding at about 15 to 20 gigawatts a year till now. But I think one significant thing that happened last year was that the government actually stepped up the amount of auctions that they do. And that is the sort of step one to getting a larger amount of capacity executed. So last year, the government actually auctioned 60 gigawatts of new renewable capacity. And that, therefore, we will start seeing that coming into the market in terms of executed capacity a couple of years down the road. So I think what's going to happen is we're going to step up from 20 to 30, 35, 40, and eventually 50 to 60 in the next 2 to 3 years' time. Now, what are the constraining issues? Of course, there are several, right? First of all is land acquisition. Mm-hmm. Land acquisition is never easy. A lot of the Indian land holdings are very fragmented. You have to deal with hundreds of farmers to get a single 300 megawatt project of wind or solar executed. So that always requires a lot of effort. The second thing, of course, is the transmission build-out. Is that going to go fast enough? And there the news is good. The government is really ramping that whole transmission build-out up. The third is capital. Fortunately, right now, especially with all the money that is going into the debt markets in India, I don't see debt as being a constraining factor. And as you know, Indian equity markets are doing very well right now. So I think equity should also be available.
Okay, so capital isn't a challenge. Land remains complicated. We are seeing evidence that some distribution companies are still reluctant to commit to these long-term purchase agreements with companies like yourselves. What is holding that back? As you say, that power demand is soaring in India.
Yeah, no, that's a good question. I think part of it is just simple governance. We've also just had the elections, which have just sort of finished a month or so ago. And everything was a little bit on hold for that. Now that elections are passed and power demand is going up, we are seeing more and more PPAs getting signed. So in our case, for example, we had won about 8,000 megawatts of auctions last year. Roughly about 2,500 of those PPAs have already been signed. And we're hoping that the rest of those will get signed this year as well. So I see that eventually all of that power demand growth will, via these distribution utilities, start transmitting itself into PPAs getting signed and more bids coming in.
Is one of the stumbling blocks the fact that some of these companies still have these legacy deals with coal energy providers? Is that a factor?
Yeah. No, I don't think so. I think the bigger issue is, the coal PPAs were there for up to a certain amount, but of course, as power demand grows, they need new incremental capacity to come from somewhere. I think the issue more is that a lot of them are owned by state governments, and they still run as state government departments. And that reform, by the way, is one of the most significant reforms that is left in India's power sector going forward.
How do you see, you talked about transmission, how do you ensure that your projects, your future products, are synchronized with that transmission?
So, there's a very transparent mechanism of allocating the transmission capacity that is being built out. So once you win a bid, you essentially know which are the available substations. You apply with the letter of award that you get, and you're guaranteed to get access into the grid. So, for example, for all of the 8 gigawatts that we have won last year, we've already got connectivity for all of those. So we know exactly where we're going to do those projects and where they're going to connect into and what the natural, the radiation is and so on and so forth. So we have very high predictability around our future set of the next 10 gigawatts of projects that we're going to be doing. But that's how the system works. And if you want to get into an area where there is no transmission substation, you can actually just go there, acquire land, and then get the government to build out the infrastructure, which then will typically take 4 to 5 years. But there is a very good system in place for building out the transmission infrastructure.
How are you thinking about the data center growth that we're seeing all over the world for things like artificial intelligence? And India has a crucial role to play. Lots of talent, lots of data centers being built out in India. Is that a growth area for you in terms of supplying those data centers, which are incredibly energy hungry?
Yeah, look, that's a great question. And I think that's something, in fact, that I get more and more from investors. And the reality is we will have a lot more data centers getting built out. And so that will become a pretty significant part of demand growth that we're going to be seeing over the next several years of 7 to 8%. Electric vehicles are also going to contribute to demand growth as well, because there's a pretty rapid shift now towards electric vehicles happening, not just four-wheelers, but also two-wheelers and three-wheelers. And eventually, public transportation and mass transportation will also go in that direction. So there is a lot of demand growth that is fed by a lot of these structural factors. What we are seeing is we're not just doing deals with US tech companies or Indian tech companies for the India operations and India data centers, but also for offsetting their global carbon footprint. And so they're coming into India and buying carbon offsets from us for offsetting their global carbon footprint. And that's actually leading to its own level of demand for us with very good, high-quality off-takers and very large-sized transactions. So, for example, we signed a 450-megawatt PPA with a very large US tech company for their global carbon offsets.
Very interesting. Sumant Sinha, thank you very much indeed for coming in, CEO of Renew. It is India's largest renewable company, listed in the US as well, on how the renewable sector in India is evolving and the demand picture. And Sumant was talking about the demand around electric vehicles. We have a redhead crossing the terminal right now. This is a Chinese company, privately held, but also a big producer of electric vehicles, rivaling and competing with the likes of BYD. It's Geely Auto coming through with first quarter net income well above the income print that came through year on year. So 1.56 billion yuan versus 714 million yuan that we saw in terms of year on year is the number. So it seems a significant first quarter net income coming from Geely. This is the owner of Volvo Cars, by the way, as well as the likes of Lotus. Geely Auto then, with net income in the first quarter of 1.56 billion yuan. Coming up with the UK election just days away, we will find out how markets are positioning. I'm going to speak to prominent investor Burnbrae's Jim Mellon on why he is bullish on UK equities. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now, context changes everything.
Welcome back. The UK election is less than a week away, with polls showing Keir Starmer's Labour Party heading for a landslide win Thursday next week, while Prime Minister Rishi Sunak's Conservatives face a wipeout after 14 turbulent years in power. There's been no sense of panic, though, in the UK asset markets so far, particularly UK equities, with the FTSE up around 7% this year, relatively modest, of course, versus the S&P, but still in positive territory. The pound also trading at around 126 to the dollar. And of course, we should note that these are just polls. We will find out the result, of course, on July the 4th, July the 5th. And that is the test, of course, as to whether or not the polls are getting this one right. Meanwhile, prominent investor and Brexit supporter Jim Mellon is among those who are bullish about the UK market. Joining me now from the US. Jim, thanks so much for taking the time. Does the equity story for the UK and the relative resilience, very relative resilience that we're starting to see here in terms of the growth picture, does that hold up if we get a majority Labour government from July the 5th?
Oh, I think so. I think it's going to be more of the same. You know, Labour's come out with some fairly reassuring points for both business and for its economic policy. And there's definitely momentum in the UK economy. You saw that the first quarter GDP figures were revised upwards again this morning. And there's no doubt that the UK is doing better than a lot of its peers. And I think that's largely down to the fact that it's a service economy, and service exports and services in particular are booming at the moment. So it looks very good. And then when you contrast that, Tom, with the fact that it's the cheapest developed market in the world and that there are vultures circling many of its companies, you have a combination of potential significant upside relative to other markets. So I'm very bullish on the UK, not just because I'm British, but because actually internationally it looks like the most attractive market.
Very interesting. It chimes with what we heard from Peter Oppenheimer of Goldman Sachs earlier on the show, who was saying and pointing to that valuation discount of around 50% broadly, UK equities versus their US counterparts. To what extent do you think private capital is going to be and continue to be a catalyst for these markets? We look at PE, for example, buying companies here like Darktrace. It seems like the private markets are seeing value where arguably the public markets are not quite yet.
That's absolutely correct. I think one of the reasons is that UK pension funds have run down their holdings of equities dramatically over the last 20 years, and they only hold about 4% of the UK equity market now. So any encouragement to bring pension funds back into the capital markets will be, I think, very gleefully received. But of course, private equity and other buyers are very interested in the UK, and I think the bid for Britvic is a good example of that by Carlsberg this week. And I have been looking at companies that might be acquired by private equity or indeed by industry competitors from domestically and internationally. But I'm also encouraged that there are more companies coming to the UK market. So as companies leave the market, there are new ones going to be coming. As you know, the UK market has regained its position as the largest market in Europe, and I think it's only got one way to go, which is upwards. We're looking at about 9 times next year's earnings on the FTSE 250. That compares to 21 times for the S&P 500 in the United States. The dividend yield is considerably higher, and for offshore international investors, there's no dividend withholding tax, unlike in the United States, where it's 30%. And elsewhere where there's significant dividend withholding taxes. And there are some very attractive companies with dividends attached.
I was going to ask, I want to get into your views. I want to get a peek, Jim, into your list shortly. But broadly, on the index, because you mentioned the FTSE 250, do you want to be buying, if you're buying on the index level, are you buying FTSE 100, FTSE 250, the small caps? If you have a preferred index, where do you land?
Well, that's a very good question, because as you know, in the FTSE 100, a very large percentage of the revenues come from overseas. It's somewhere around 70%. So it's a very different composition to the domestically reflecting index, which is the FTSE 250. Personally, I would buy the discounted investment trust with good management, low management fees for the smaller cap to medium-sized cap companies. And then in the big ones, my focus at the moment is actually on telecoms and on financials, because I think both of those areas look even more undervalued than the rest of the market. But you've got a cornucopia of choice, basically. But I think that go for the actively managed funds, which are selling at discounts on the market for the smaller companies, that you don't have to pour through all the annual reports. And then on the bigger ones, I've got a selection of companies that I'm very interested in.
Jim, I'm looking, so you talk about telecoms. On the list that you sent us, BT is on there. We've got change at the top, of course, a new CEO of BT. And on the banking space, within the banking space, you've got Lloyds as well. So this clearly, you underscore, this is a value story, but as well, is it, with the banks, for example, is this a buyback, a return to cash story? And to what extent is dividends a theme for you in terms of the upside that comes through with exposure to companies like BT and Lloyds?
Well, one of the great things about the US market in the last 10 years has been the significant levels of buybacks and the financial engineering that's resulted in rapidly rising earnings per share. And I think the same thing is coming to the United Kingdom. In financial services, the banks are beginning to get the idea that buybacks are a good idea. And whereas Lloyds' management is somewhat lacking, they managed to attract every single scandal that's going. They are generating very significant cash flows, and indeed those cash flows are going to grow. So my estimate for 2027 is that Lloyds will be yielding about 8% respectively. It's on around 5 times earnings, and it's the absolute dominant player in the UK mortgage market, which looks okay to me because housing is going to be a big positive feature of the economy going forward. So Lloyds, yes, I think is a good value play, and they'll also be buying back a lot of their own stock. In terms of other banks that are interesting, the HSBC story, I think, is very good. They have excellent management, in my opinion, and they are going to be generating very significant cash flows and buying back their stock at a very rapid level. And they're also a play on emerging markets in a sort of sanitized way. Both China and Hong Kong are very significant parts of their earnings. So those are 2 banking stocks I think you can buy with some confidence.
Interesting. And of course, change at the top of HSBC as well, with Noel Quinn announcing that he will be stepping down, at least at some point. Look, you touched on this, so before we let you go, Jim, you talked about the watch list you have for potential takeover targets. Can you give us a glimpse as to what that list, or what is on that list, Jim?
Well, I like Phoenix, which announced this week that it was trying to sell, or was going to sell, inviting bids for its Sun Life subsidiary. Phoenix is the largest aggregator of what you might call zombie life funds, including Standard Life, and also of pension funds, buying them in from companies that want to get the pension funds off their balance sheets. It's got about a 10% dividend yield. It's got reasonably good management. I think it's an ideal target for private equity. If they run off the books, they could make a lot of money. So 3 or 4 times, in my opinion, of future cash flows, 10% dividend yield, reasonable balance sheet. I think it makes it a very juicy target. And it's a big company. It's about £5 billion in market cap.
Okay, really fascinating. Really appreciate your time this morning. Jim Mellon, Burnbay chairman, of course, Burnbray chairman, Jim Mellon, on the calls around the telecom space, the bank space as well, and the bullish call on UK equities. Coming up, Nike shares tumble pre-market after the world's largest sportswear company issues a full-year outlook that misses expectations. As you can see, pre-market, the stock down 14%. More on those earnings next. This is Bloomberg.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rate while this is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back. Nike has tumbled pre-market after a full-year outlook that missed expectations. The world's largest sportswear company sees revenue declining in the mid-single digits in the current fiscal year. Let's get more then with Bloomberg consumer goods reporter Dasha Afanasieva. Dasha, what is going on and what is going wrong with Nike?
Hiya. So Nike had a bad earnings update on all sorts of parameters. Not only did it miss expectations in terms of revenue and some profit metrics, it's also massively downgraded its full year forecast. Now, the core of the issue is that just its shoes aren't popular anymore. The particular problem area is lifestyle shoes. So this is things like Air Force Ones, things that you wear day to day. And they've just kind of, it seems, gone out of fashion. And I think the concern is the timeline of this turnaround, because Nike had issues all through last year. This isn't the first quarter, and now the CEO is saying it's 25, fiscal 25, which we're in now. That is the turnaround, and you sort of think, well, why is it taking so long? And part of that is innovation. That they've got to think of get an innovation pipeline where throughout the year they're coming up with new products that can compete. But part of that is also marketing. You do wonder, are some of these brands just stale, particularly Converse?
Okay, Bloomberg consumer goods reporter Dasha Afanasieva on the challenges for Nike and its lineup. Thank you. Checking pre-market in Finera on the back of this news that Nokia has come through with a plus $2 billion bid for this company. The stock then pre-market up almost 19%. Up next, Bloomberg Brief with Danny Berger and Manus Cranney. This is Bloomberg.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set that agenda.
Disastrous debate. Round one of Biden versus Trump sets off alarm bells just over 4 months ahead of the election. Counting down to PCE, will it be the slowest of 2024, emboldening the rate cut debate? Losing momentum, Nike falls short and concedes ground to one of its major rivals, Adidas. Good morning, Manus.
A very good morning, Danny. It's almost as if there's nothing else to talk about apart from that debate and how bad it was for Biden and for Trump. Equity markets, we're counting down to the PCE. You've got the Atlanta Fed, GDP now softening a little bit, 2.7%. Nike is the stock that you want to watch. Get your running shoes on, whether the Adidas, Puma, or whatever, but at the moment, it looks like Nike's not top of your brand selection. We've had the auctions this week. We're on the bond. Watch out for the PCE today. The Citi economic surprises, the lowest since 2022. Bostic says there are glimmers of evidence that the price changes are moving our way, and the dollar index had been bid on the back of the Trump narrative around tariffs. But wow, what a debate, Danny. Good morning.
Good morning, Manus. Yeah, I mean, what a debate. And we can talk about as much as we want how difficult it was for President Biden, how he positions after this. But you come away no more certain about 2025. If you're an investor who is hoping to watch this debate for any policy, you got none of that. Instead, what you come away with is anything more uncertainty as the choir about should Biden be replaced starts to heat up.
Yeah, and that is a very, very real and live debate. You're looking at Democrats in full panic mode, regardless of what Trump did during this debate in terms of the narrative. The point about it was you come away, you had to roll out Kamala Harris on CNN who said, yeah, it was a slow start, and that is probably the understatement.
Well, I mean, it's arguably been years of back and forth, and we finally have had President Biden and former President Trump facing off in person in the election's first presidential debate.
There's more to be done. There's more to be done. Working class people are still in trouble.
He has not done a good job. He's done a poor job, and inflation's killing our country. It is absolutely killing us.
The price of eggs, the price of gas, the price of housing, the price of a whole range of things. That's why I'm working so hard to make sure I deal with those problems. I was recently in France for D-Day, and I spoke all about those heroes that died. I went to the World War II cemetery, World War I cemetery he refused to go to. He was standing with his four-star general, and he told me, he said, I don't want to go in there because they're a bunch of losers and suckers. My son was not a loser, was not a sucker. You're the sucker. You're the loser.
There's nobody that's taken better care of our soldiers than I have. The money that we're spending on this war, and we shouldn't be spending, it should have never happened. I will have that war settled between Putin and Zelensky as president-elect before I take office on January 20th. I'll have that war settled.
Let's get straight to Tyler Kendall. She joins us now from on the ground in Atlanta. You've had no sleep and a lot of time to really absorb the takeaways here, Tyler. Good morning to you. I mean, there's a clarion call here for replacement of Biden. Just how bad was it for him, or was there another side to this analysis?
Yeah, hey Manus, as you're alluding to, while there will be some talk about policy today, we're really expecting the emphasis to be on the presentation. All the headlines you're going to see have been really about the missteps that President Biden took, whether that was stumbling over words or meandering through answers. And also he had a noticeably more raspy voice. Now, a source familiar tells Bloomberg News that the president was fighting through a cold, but as you know, he's been dealing with these questions about his age and whether or not that could impact his reelection. Of course, he's at 81. He is currently the oldest serving U.S. president in U.S. history. I want you to take a listen here to this one moment that's been gaining traction. I spoke to a Democratic strategist right after the debate that told me that this was the moment that really seemed to set the tone moving forward.
Making sure that we continue to strengthen our healthcare system, making sure that we're able to make every single solitary person eligible for what I've been able to do with the COVID, excuse me, with dealing with everything we have to do with, look, if we finally beat Medicare.
So you heard there a meandering answer and then a pause that was really the beginning of the debate in terms of a question that had to deal with our national debt, and then it ended up leading into health care. But of course, you know, to be fair, President Trump wasn't without his exaggerations and also citing some falsehoods. Bloomberg News was fact-checking on the terminal and online all night, but it really seems that President Biden's missteps have been the focus here and moving forward.
So what now, Tyler, especially when you have not just Democrats in quiet talking about their concern, but out loud? How does the Biden campaign respond to this, and the Trump campaign for its part too?
Right, well, President Biden actually had already came out right after the debate. He had a stop at a Waffle House here in Atlanta where he told reporters that he felt like he did a good job. Manus alluded to earlier, Vice President Kamala Harris came out and admitted that it was a slow start, but she said that they ended up finishing strong. But something interesting that struck me being in the spin room was how much Republican colleagues came out for former President Trump. They came out early and often for him, whereas it took us a lot longer to see the Democratic surrogates come out.
Okay, Tyler, thank you so much. We know you've been up late. Hopefully this means you can finally get some sleep. Bloomberg's Tyler Kendall from Atlanta. Joining us now is Alfonso Peccatiello, CEO of the Macro Compass. Alfonso, good morning to you. Did last night change anything for you when you think about 2025 and how you want to position?
Well, I should say the debate was not much of a debate. Unfortunately, we learned not a lot when it comes to policy, but we learned that the Democrats most likely have to probably replace Biden last minute in the race. And that's quite something, because right now, if they don't, it seems like the polls are going to switch pretty aggressively towards Trump. And if they don't, they are probably bound to lose the elections, and that has a lot of potential impacts. I think we got to watch the bond market very closely, particularly the shape of the yield curve. Trump is coming out with a policy mix that is a big risk premium potential steepener for the yield curve. It comes with a mix of pressuring the Fed to basically be more dovish, cut interest rates, but at the same time imposing tariffs. And so the combination of the two has to steepen the curve, has to bring back this risk premium in bond markets, and has to bring back volatility as well in macro.
Well, that term premium is really sort of becoming more anemic. I think Terry Haynes summed it up nicely. It was largely a fact-free zone that wasn't policed in real time. You talk about the possibility of a Trump regime. That regime, according to Adam Posen, would be massive deportation of immigrants. Larry Summers says it would be the mother of all stagflation. Now, that would lead to rate hikes, not cuts.
Yeah, so that's exactly what the bond market is going to do, right, Manus? Because if you try and pressure the Fed not to respond appropriately to this type of stagflationary policies, what the Fed is going to do in that case is just try to hold rates, right? But then what happens is the bond market is going to go further down the curve and pressure for these hikes to come and put back this inflation risk premium into the market, would put back this volatility back in the long end of bond markets. And we know that bond markets are like the base of the pyramid of financial markets. If you try to shake them, right, and you bring too much vol into it, the reverberations on other assets, starting from credit all the way up to equities, are very evident, as we saw, for example, in 2022.
Here's the problem, Alfonso, is you can have a clear view of what that would mean, but it can be a hard thing to trade, especially now when we don't know what the outcome is. And as you say, we don't necessarily know who the two candidates will be at this point after last night. So you can have this view, Alfonso, but how much conviction can you have to trade it? Even next year when we have the president, considering you see Team Trump, I mean, pushing back after some of these reports come out of things like the independents and the Fed. So how much conviction can you really have?
So the beautiful thing about this then is that in macro, you don't have to necessarily trade directional, but you can also trade volatility itself, right? So one thing is to say, when is the curve going to steepen? When is the term premium going to be back? The other thing is to say, I have a relative certainty that vol in bond markets is going to increase. And if you have that view, that's what you can try to do is structure trades that benefit from that increase in volatility, right? And that is one way to express the idea.
Well, you say the pool party in U.S. equity markets is very crowded. Well, we know how crowded it is. We know who makes the biggest splash there. What did you learn after 3 days and a 13% drop in NVIDIA? Is it a warning shot to perhaps buy volatility? Because, you know, this is a splendid example of moments of existential angst in one stock.
Amongst the many models we run at the Macro Compass, we have a thing called the pool theory. So, Manus, if you think of a pool party, right, what happens is that you have the early joiners, they come in and the pool is almost empty, they have fun, and then the rumor gets out, right, and then more people join the party. All of a sudden, you know, the pool becomes crowded and there is no space anymore and the music is getting down and, you know, the party is about to end. And the pool right now is pretty crowded, looking at a couple of indicators. I mean, realized volatility in the S&P 500 is below 10%. That's pretty low. And on top of that, out of the money puts are, you know, sold away for very little premium. And when the combination of these two things happens for a sustained period of time, it's generally a signal that the pool is pretty crowded. Where you can see it as well is carry trades. Stuff like the Mexican peso, the Brazilian real have unwound very aggressively. Why? Well, the carry pool was very full as well. And I guess we're getting some signals as well from the NVIDIA drawdowns that, yes, the pool is pretty crowded right now.
Okay, Alfonso. By all accounts, the hedgies have gone to the Hamptons, according to Goldman Sachs. But I can give you on good authority, the pool party at Soho House in this city, it is crowded, Alfonso. Alfonso Peccatiello of Macro Compass with the very latest. I'll leave you with that thought. There you go. Let's get you up to speed with the other stories trending on the terminal. There are other terminal stories apart from politics. L'Oreal is expecting slower growth for the overall beauty market this year. They've got weakness in China weighing on their sales. The cosmetics group told investors they see the global beauty market growing between 4.5% to 5% this year.
The judge who scrapped Elon Musk's $56 billion Tesla pay package will hold a hearing over the recent shareholder vote reviving the deal. The Delaware Chancery Court may take judicial notice of the vote, but it is not obligated to recognize the results. Tesla has argued that the vote addresses many of the concerns that the judge had raised in her decision.
Argentina's Congress approved President Javier Milei's signature pro-business reforms. This marks an inflection point for the outsider to govern with a hostile political class he continues to rail against.
Coming up, we have one political event out of the way. It's time for the next one. Investors bracing for France's first round of legislative elections on Sunday. We're going to get the view from JP Morgan Asset Management next on your Bloomberg Brief.
authorities.
Could face bigger challenges. Britain's next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is unprecedented territory in French politics.
We are already seeing that in Brussels. Is France diminishing both reputation but also influence?
Whoever will be in power will be constrained, in my view, by how the financial markets react.
We see that the electoral pledges of both far right or far left are evolving. So they do backtrack on some of their pledges, but we do still see fiscal slippage ahead.
Rational people will prevail ultimately, because the closer we get to the elections, the less buzz and the more fundamental votes. And in any event, after the 8th of July, things will stabilize in a much more clearer environment.
Well, the CEO there of Euronext talking about rationality will kick in, but the markets at the moment are on edge, and this is ahead of the French legislative elections. The first round of that voting is set for Sunday this weekend. Vincent Juvin, global market strategist at JP Morgan Asset Management, joins us now. Vincent, we'll get into the fiscal right and left in just a moment, but set the scene for us here as we go to the polls on Sunday. From your perspective, you say that we will have fiscal angst, but this is not an existential crisis in the EU sense, as we saw during the European debt crisis. Good morning.
Yes, good morning. Yeah, we've seen recently, obviously, a lot of tension on financial market, especially European one and especially French one. And yesterday we have seen it again with the French spread moving north of 80 basis points. So this tension is definitely going to continue. And as we look forward beyond the second round of these elections, no political scenario seems really good for financial market. The best scenario would have been the current coalition remaining in place, forcing spending cuts, obviously, as these were already scheduled by Bruno Le Maire, which was already announcing 20 billion cuts for next year, which market really expected, so that France could comply with the EU budget rules, so that France could address the issue raised by S&P at the end of the month, May, when they lowered the French credit rating. Mm-hmm. So all these issues obviously will remain with a new coalition, which will need to clarify its intention from a budget perspective, and that's obviously the main issue for financial market at the moment. On top, obviously, many local issues, whether or not France will remain as attractive for foreign businesses to invest in France. Let's say, previous government has been great at attracting a lot of FDI in France.
Can I jump in here? Because I want to ask about that specifically, because we've just come out of this period where Macron has courted a lot of business, but specifically American banks. I mean, we've seen events hosted by certain employers, who I won't get to because you may or may not work for them, but there has been this moving of trying to get banks into France. Does a new government change that? Do you actually see businesses perhaps stopping investing as much in the region, especially the international ones, as they did under Macron?
Well, you don't stop overnight investing in a country like France, and obviously politics come and go, but we need to obviously have clarity, I guess. While a lot of international businesses, including American businesses, including the bank for which I'm working, JP Morgan, invest in France, it's obviously for the ecosystem, the stability of politics that we have had so far, and clearly the availability of well-trained workforce, and all the issues. These are not going to disappear overnight, so they stay. We're there for the long term. But obviously, the previous government managed to create these ecosystems, to convince all these international companies to settle in France. The next government will need to reassure those businesses that they can stay and stay at the same condition, obviously. That's among the risks that we face with this new coalition, which could come at the National Assembly after the second round.
And we've already heard Le Pen try to step back a little bit from complete chaos for the bond markets as we saw those spreads evolve. I'm looking at the latest flow from Bank of America. The largest outflows, European flows, had their largest outflows in 14 weeks. I just wonder to what extent do you agree? I caught up with UBS earlier in the week. They say a lot of institutional money has already pulled the ripcord. They've exited European and French equities. The spreads have blown out to 80 basis points. That trade is almost exhausted until you see the complexion of the outcome in the autumn in terms of the mandates, the fiscal programs.
So yeah, we have seen obviously this outflow in the industry. This set, we remain at JP Morgan Asset Management long European equities and some fixed income market as well. We acknowledge that obviously volatility will stay elevated beyond the second round. We will need to see what this coalition will propose in terms of budget. We will probably have to wait until the autumn because there's an official deadline when France will, next to 6 other countries in Europe, deliver their plan to adjust their budget to reply to the excessive deficit procedure. So we may probably stay in the uncertainty during that period. This set, I believe that it may get worse before it gets better, but I don't think we are heading to a new European debt crisis.
And we saw this in Italy too, with spreads starting to widen, and already it's happened in France. The bond vigilantes are out. Christian Lindner, the German finance minister, said that if the ECB steps in, it would raise some economic and constitutional questions. Do you think this is an ECB willing to step in if the spreads get much worse?
Could be. They've recently said that at the moment the spread widening wasn't disorderly. It didn't really prompt any reaction from their side. We could see further spread widening in the coming weeks. I remember back in 2012 when François Hollande came in power, the French spread was double the level it is now. So we could potentially see that type of development. But you raise a good point. This time around, the ECB has tools to address any disorderly spread widening, which we didn't have in 2012. That's a major difference in my opinion. Maybe also in the institutional framework in Europe in 2012, you had an excessive deficit procedure. You could only do austerity. Today, you can do this fiscal consolidation, and at the same time benefit from investment from the next generation EU fund, for instance.
Right.
So
Vincent,
you can reduce the impact.
We're just about out of time. Thank you so much for your thoughts. Really appreciate it this morning. We'll see what this weekend brings. Vincent Jouvin of JP Morgan Asset Management.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
It's been very brief. I'm Menace Cranny alongside Danny Berger in New York. Front pages, this is what we've got for you. Guess what? Politics tops that bill. First up, Washington Post. The Democrats are panicking over President Biden's debate performance. The lawmakers, operatives, donors, and voters expressing concern.
Pretty much every paper leading with the debate, but also this on Bloomberg. The NFL needs to pay $5 billion. They've lost an antitrust trial over their Sunday ticket because they only gave it to DirecTV, and the allegation was that DirecTV could then artificially inflate prices.
And the Financial Times, soccer, Taylor Swift. Bit of an interesting mix. Different kind of fans, one could say. Rattling the inflation.
Maybe the same.
Rattling the inflation worry central bankers. Please, I'll just get this last sentence out. The rush to sporting events and concerts will fuel a surge in prices.
Wait, hang on. There are definitely people who go both to Euros and to Taylor Swift.
Listen, I am not having a go at any football fans, not in the slightest. I mean, rugby fans, football fans, Taylor Swift fans. I mean, royalty went to Taylor Swift the other night in London.
They did that selfie.
They did a little bit of a selfie. But the fact of the matter is, Danny and I are up for 2 tickets for Taylor Swift in London because it's $1,000 and it's going to boost inflation all the way around Europe.
It is, and the bad thing is that the worst part of inflation in Europe is services, and this is services inflation. Even Goldman Sachs wrote a note about this, essentially saying that the Euros 2024, the tourist inflow will affect their Eurozone inflation forecast.
Well, I can tell you, the price of hotels in London is not cheap, but if you look at what's going on in Cologne or in Germany, whenever the football or the basketball comes, they've doubled the prices, and wages are up over 5%. But as I say, we are in the market to take the show on the road to London, mid-August, to Taylor.
I don't know if they'll let us do that. I like the idea. Oh, I'll definitely come.
Okay,
I'll see you there.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing.
but what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Friday from our global headquarters in New York. Danny Berger alongside Manish Cranny. Let's set your agenda.
A disastrous debate. Round one of Biden versus Trump sets off alarm bells just months ahead of the election. Counting down to the PCE, will the slowest of 2024 hit the tape, emboldening the rate cut debate and losing momentum. Nike falls short, conceding ground to one of its major competitors, Adidas. Danny, good morning.
Good morning, Manus. This is one of the more remarkable things about this market this week. NVIDIA fell yesterday. Even so, it was a stock market that gained. It was a NASDAQ 100 that gained. Small caps were off to the races, up 1%. For all the talk that NVIDIA would be the destruction of this market when it falls, other things have come in to pick up the pace. Maybe it's just some rebalancing here at the quarter end. S&P futures up 1/3%. Your 10-year yield higher by, let's call it 2 basis points. 430 is where we stand. During the debate yesterday, the only slight market reaction we had was a bit of a stronger dollar, yields higher. But can you really look at yesterday and say, I have a clear market view? Euro versus the dollar, that's steady. 106, just under 107 is where we stand. Perhaps the more pertinent political issue now for investors to focus on is the first round of the French voting, Manus.
Absolutely, and we've just had the discussion in the first 30 minutes of the show about volatility. We've had Alfonso Pecatello talking about a crowded pool of the equity market, the bond market. Volatility will rise. JP Morgan suggests that the nerves are jangling a little bit more in terms of the French election. But when it comes to that US election, I mean, 24 hours ago, we sat here and we quoted CBS saying 20% of the US population wanted to watch that debate to find out some clarity around policies. And Terry Haynes says it was a fact-free debate, wasn't policed in real time. So did we learn much?
I mean, what we learned maybe solidified some concerns. Yes. And I mean, you even just hear it from Alfonso Pecatello. The way he's preparing now is for a Trump portfolio. And a lot of people have said, look, you could know what the results are, not know what the market reaction is. He had a very clear view, though. Curve steepening, higher risk premium needing to be associated with bonds because of protectionist policy like tariffs.
And that risk premium hasn't been, that term premium hasn't been in those bond markets sufficiently to draw people in. So let's see. We've got more debates to go. Yeah. And there's rising calls. I mean, there's like one line here from various people out there. I think it reflects it all. Biden is toast, and we are talking about potentially replacing him. So that's the narrative that's building. But let's talk about arguably one of the most potent back and forths between President Biden and the former President Trump, finally facing off in this presidential debate.
There's more to be done. There's more to be done. Working class people are still in trouble.
He has not done a good job. He's done a poor job, and inflation's killing our country. It is absolutely killing us.
The price of eggs, the price of gas, the price of housing, the price of a whole range of things. That's why I'm working so hard to make sure I deal with those problems. I was recently in France for D-Day, and I spoke all about those heroes that died. I went to the World War I cemetery he refused to go to. He was standing with his 4-star general, and he told me, he said, I don't want to go in there because they're a bunch of losers and suckers. My son was not a loser, was not a sucker. You're the sucker. You're the loser.
There's nobody that's taken better care of our soldiers than I have. The money that we're spending on this war, and we shouldn't be spending, it should have never happened. I will have that war settled between Putin and Zelensky as president-elect before I take office on January 20th. I'll have that war settled.
All right, let's get into the big takeaways. Joining us now is Bloomberg's David Gura, who's on the ground in Atlanta, and Bloomberg editor Derek Walbank for the Global Perspective in Singapore. David, okay, you were there in Atlanta. I hope you've slept. I'm not sure if you have, watching the debate. But it's clear that the response from it, Claire McCaskill was on MSNBC saying that Biden had one thing to accomplish. He failed at it. Does that mean he's not going to be the candidate? I don't know. So we have Democrats both in private and out loud starting to question this. Is this a realistic proposition that we could actually look for another candidate after last night's performance?
It would be extraordinary if that were to happen, but let's step back and look at what the expectations were surrounding Joe Biden. I mean, the bar couldn't have been lower. He didn't have to have a good debate. He had to have a decent debate. There was this swirl of attention around him, focused on his age and his capacity to have another term in the White House. He showed up, and from the get-go, it was startling how off he seemed to be. He was coughing. He was hard to listen to. He sounded hoarse. Just watching the two candidates in compliment, Donald Trump was staring at the screen, engaged with what was going on. You saw President Biden kind of looking around and laughing to himself, but the level of engagement seemed so different. And so I think it's safe to say this was an incredibly bad debate for Joe Biden, and I think we're just beginning to wrestle with what the consequences of that might be. I mean, there have been whisperings among Democrats about their dissatisfaction with him as a candidate because of his age, because of how he's been performing. Those up until this point have been whispers, and you bring up Senator McCaskill's comments. I think that represents something extremely important, because she's seen as kind of the old guard of the Democratic Party. The fact that she would articulate that indicates to me that this has kind of reached a new level of seriousness. And to your question, Danny, I think we don't really know procedurally how this would play out. We were talking in recent days just about how novel it is this debate happened so early in the cycle. Customarily, you have a presidential debate after the nominating conventions. That didn't happen this time around. I guess the upside for Democrats, if they wanted to pursue that path, if they wanted to go down that new route, is it does afford them more time to figure out how that might happen in actual fact. But again, this is new ground for this party, and certainly worrisome ground for this party to tread.
Well, certainly it's going to rise on the debate. And from the investment community, there's a note that we have from Greg Valliere. Our tentative bottom line is that Biden will drop out within days, giving an opportunity to a young, fresh face. Whether you like Biden or not, it was a sad night last night. So, you know, who that young, fresh face could be anybody's choice. People are floating names like Gavin Newsom, etc. Let's go to the global perspective. Derek, good evening. You are in Singapore. The first take here is from the global perspective in Asia. As Asia looks on, how do they view this particular debate? There wasn't a great deal of substance in policy, but your first take from Asia.
Well, Manus, I think one of the things that I would point to here is that this is a rare chance. You know, the U.S. markets are all closed, but they're open in Asia when we have some of this big stuff. And during the debate, they were all open. There was a meme stock whose Chinese name sounds vaguely like Trump wins big that was limit up 10% in Shenzhen. And so that's sort of how a lot of people were looking at that in terms of assessing the assessing what happened there. I do think that there were some concerns in some foreign capitals that have been kind of allied with Joe Biden about their performance there. You're starting to see some comments there sort of start to trickle up. But yeah, I think the view from abroad was very similar of the performance, was very similar to the view from home. It was not a good night by all accounts for Joe Biden. I think that the Donald Trump that showed up was the Donald Trump that we've all expected to kind of show up. He sounded sort of in command, but if you sort of dive into the words, there were a lot of things that were said that maybe didn't agree with the truth in a lot of cases. But I do think that the question here was on the president. You know, the president had wanted to have this debate. This is something that the Democrats had sought. They wanted to have a contrast early. They got that wish, and then you know, the narrative was really pretty well set in the first 15, 20 minutes of this action.
Well, David, I mean, to that point, this is a debate that what we're talking about right now is style. the style of how Biden and Trump spoke. We're not talking about what they said. Was there any actual policy to take away from last night?
Not a ton of it. I look at the economy in particular. One of the most interesting parts of this was how former President Trump, reframed what had happened in a variety of circumstances. January 6th, perhaps most startlingly, but with the economy as well. He talked about how Joe Biden created inflation. He talked about how good the economy was that he handed to Joe Biden. So, he placed a lot of good faith in the fact that the tax cuts that he put in place are what juiced the economy that Joe Biden got. Again, that was kind of backward looking. I think going into this debate, I thought that the focus on style was going to center more on the former President Trump and less on Joe Biden. I thought that he was going to be the one who was kind of infusing this with policy points and trying to move the debate in that direction. That didn't happen, and I think that just left this vacuum there on the stage, guys, where it became possible for former President Trump to lie and spew these mistruths, and for Joe Biden to kind of fumble in response to those. There were moments here when he could have underlined those lies and misstatements. He didn't do that. I mean, abortion is a very key example of that. You had the former president saying that he was in favor of exemptions for abortion. Joe Biden didn't even take it to underlining that in his response.
Well, Derek, where does the Biden administration go to now in terms of salvaging this? Because even on foreign policy, Trump was saying Israel, he would allow them to finish the job against Hamas in Gaza, refusing to accept the election result. These are just some of the lines coming through from Politico. From the foreign policy perspective, in Israel, in Ukraine, coming up to some of the big global events that we've got over the summer, is this an opportunity for Biden to reclaim some ground ahead of the next debate?
Well, I think, look, man, there's a couple of things to watch here. One, I do think on Ukraine, that was probably the biggest foreign policy fracture point that they talked about. Trump was saying that he was going to get to a solution reasonably quickly, even suggesting that he could have some deal in hand, possibly if he wins before he takes office in January, suggesting that conflict never would have arisen had he been president. But, again, with the skepticism that Trump has had and been very, very vocal about in terms of the amount of U.S. aid that has gone to Ukraine. So I think that this debate will have been very heavily watched in Kyiv, as well as in Warsaw and in other places in Europe for that sort of difficulty. I do think, you asked about the salvage thing, and coming to this, to the very thing we started this about, does Biden continue, does he not? There is the ballot deadline in Ohio in early August, so if there's going to be any move, it has to be done very fast. It would be reasonably unprecedented. It would be very hard. If Biden's continuing, the easiest way to do that is to show forcefulness, right? To come out, have better appearances. It is a thing you could theoretically solve by going out and solving it, and it is on the president to be able to go do that.
Thank you very much, Derek. And David, thank you for rounding that off for us, our team coverage on the debate. David Gurr in Atlanta and Derek Waldbank in Singapore. Joining us now to get her first take is Kayla Cedar, macro multi-asset strategist over at State Street. Good to have you with us. Look, we've done the politics of this. We've talked a little bit about the French elections, the debate in the US. From an investment perspective, do you hit a massive pause button now when you see these kind of unknown knowns coming to the fore in France, in the debate in the US, etc.?
Sorry. When we think a little bit more about what's happening in terms of policy and politics and whether or not this is a reset or not, I think the big focus is actually still on the monetary policy side of things. And that's, we can't forget about what's coming up and what we're seeing in the data here as well. And so, yes, we have the elections going on, and that does present some uncertainty. But I think at least here in the US, especially given where we've seen yields, it's still not a ton, there's still not a ton of caution out there. And so I think when it comes to allocation from here, we're still very focused on data, very focused on when the Fed's first cut is going to be. And so what that means for now is that there's still opportunity for really equities to do okay, given that's an opportunity for this concentration to continue.
Kayla, Sorry, and that's exactly where I wanted to go. When you say U.S. equities to do well, are you just talking about NVIDIA, or is it the rest of the market too?
Yeah, I think because of the concentration that we've seen has kind of been a bit of a concern for some folks. We have to keep in mind, will this environment continue in such a way that it will allow that concentration to continue? And I think what we've seen in the data and what we see in a lot of our institutional data is that institutional investors aren't running away from this concentration. We still see overweight positioning in tech, and we're actually continuing to see inflows into the tech space. And so I think because of how data has evolved, that's still where we see the most upside.
Is there a differentiation, a subtle differentiation then to be taken? Goldman Sachs yesterday, the flow from them was about the aggressive nature of de-risking in tech. Hedges have aggressively, the hedge funds have aggressively been net sellers in June, the worst on record. What are you seeing that contradicts that?
I think in terms of the hedge fund community, we can look a little bit more in terms of shorting and where hedge funds are shorting the most sectors or not. And so we're seeing very little betting against tech stocks. And so, in terms of whether or not folks are nervous on the fast money side, we're not seeing a lot of willingness to bet against tech yet. If that were to change, I think that would be a key thing to look for. But at this point, we're really not seeing much of that.
Well, also one of the other remarkable things we've seen, Kayla, over the past week, when NVIDIA falls, other parts of this market have taken up the slack. It usually has been small caps, the more cyclical kind of stocks. Yesterday, NVIDIA falls, and all the headline benchmarks are still higher. Mike Wilson was with me earlier this week and called it lifeboats, that we're just clinging on to something that we can buy every time something else falters. What do you make of the nature of this market that feels like it's a zero-sum game, that we just keep going back and forth?
Yeah, I think we will get some of these short-term moves. However, I think bigger picture, longer term, or medium term throughout the rest of the summer, we have to think, is the macro environment going to change in such a way that would allow some of these small cap stocks, other parts of the market, to really outperform long term? And what we've seen is probably not. Whether that be, so take some of the macro policy, monetary policy. The cutting cycle is likely to be very shallow and relatively short. And so is that really enough to boost small cap earnings? Probably not relative to tech.
Right.
And so that's why we're really not excited about some of these short-term moves in small caps.
So Kayla, my takeaway is still all I can buy is NVIDIA. Thank you so much for joining us this morning on this Friday. Enjoy your weekend. Kayla Cedar of State Street here on Bloomberg Brief.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's your Friday edition of Bloomberg Brief with me, Menace Cranny, and Danny Berger in New York. Well, there's one stock that we're tracking. Freudian slip. Nike, of course. We're tracking that.
Nike.
We're tracking Nike. There you go. It was all jumbled up in the back of the head. Either way, I hope my pension fund hasn't got much of it in it. Down 14.5%. The apparel giant tumbling after the company's full-year outlook. It failed to meet those expectations. Bloomberg's Dasha Afanasieva joins us now. This was pretty disappointing all the way around, leaving the door wide open for competitors. Were they losing? What is happening? They have this new CEO. I thought he was the evangelist to turn it around, but he's done an okay job. But what has happened in this set of numbers?
Hi, yeah, it's been a bit of a really grim one because you've got, on the one hand, bad quarter, lots of misses, and on the other hand, they've got this horrible outlook for this fiscal year that sales are going to contract mid-single percentages, whereas analysts had expected sort of a 2% growth rate. I mean, you look to a brand like Converse, which is down 17% at constant currency exchange rates, and you do wonder, does there need to be a more drastic solution than talking about innovation, than tightening the pipeline of innovation and also getting products to market quicker? Is it a case of, is Converse going to come back as a brand? I just had a check, that in the UK, the Chuck Taylors are discounted from sort of £70 to £40 at the moment, which doesn't bode well in terms of their popularity. And it's also an incredibly saturated market driven by social media, where sort of everybody flocks to the next shoe. And how can Nike really compete there when it's also trying to manage its profitability and cutting SG&A, which can negatively impact marketing? So it's got a lot of balls in the air.
Yeah. I mean, Dasha, that's exactly where I wanted to go with you, because when you look at this market, I mean, it's like a new sports brand pops up every day and gets popularity. I mean, Gymshark takes off because it's all over the internet. If you walk around New York City, everyone's wearing aloe, I think it's pronounced, yoga stuff. So what now? I mean, how does Nike combat something like that? Is it just a matter of getting out there on social media and getting influencers to tout their stuff, or is it something more drastic?
I think it's that, and it's sort of having a pipeline of that when you're backing a whole bunch of products that then maybe one flares up. I think it's also the thing that you mentioned with say yoga, the success of Lululemon, is you have these like specialist retailers like Salomon shoes, for example, originally kind of a climbing brand, and running shoes now is actually quite sort of gore trendy. And you can see how sort of getting the niche tribes, the smaller groups of people on board with a sort of highly specialized, sophisticated product has actually spilled into more mass appeal. So I think that Nike has to kind of keep all of these levers going whilst also controlling costs. It's a very sort of fast, challenging thing. And I do wonder if it's a bit like with, say cosmetics giants that have a brand and then it kind of burns really fast and then runs out of steam. Maybe it's the same with some of the Nike brands, and they need to be gotten rid of. I don't know.
Okay, Dasha, thank you so much. Bloomberg's Dasha Afanasieva, thank you so much for that. I mean, it is the season for disappointing shoes. I mean, Golden Goose, they didn't get their IP off the ground.
Well, I'm just listening to Dasha there. I mean, you know, she's available. She likes them. She can be an influencer. She can be on your Instagram account and sort of embolden your sales. I'm tortured with Cuts. Cuts come. Have you seen the brand Cuts?
I have no idea what that is.
Brilliant. It's like a leisure wear kind of thing. It's in the village. It's like,
are you being sponsored? What is this?
I'd like to be sponsored. We're open for sponsorship as well.
I think we're going to get talked down to. I don't think we're allowed to do that.
You want to go to Taylor Swift and sponsorship? No. Okay.
Okay, we're going to wrap up the weekend for you just up ahead.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Let's get you set up for the rest of the week. We're going to get a slew of economic data, PCE, personal spending, and income, and unmatched sentiment. Then we're also going to have some Fed speak throughout the day, Barkin, Bowman, and Daly. Then on Sunday, Manus, we have the first round of France's legislative elections, so a week and a weekend full of politics.
It is, and certainly politics is going to continue throughout the day on Bloomberg TV. The surveillance team will pick it up. One could say, according to some of the notes, Democrats are in full panic mode. Will they go for a radical shakeup and change their candidate? That debate continues on surveillance over the next 3 hours.
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
I don't think you want to be taking a whole lot of risk ahead of this election.
Fiscal policies of this country are making monetary policy for our monetary policymakers much more challenging.
Biden has played his cards in a sense, and I think Trump is talking a whole nother level of protectionism.
Biden's policies on the fiscal side are much more in line with kind of controlling the deficit.
We have policies that have been in place for 4 years. That continues. I think the markets basically can get some comfort out of that. Any big shift, though, look out.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Bloomberg Surveillance begins right now, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg, and we begin with our top story, a disastrous performance from the president in Atlanta, Georgia.
We had the greatest economy in the history of our country. We have never done so well.
The economy collapsed. There were no jobs. Unemployment rate rose to 15%. It was terrible.
They spent money like a bunch of people that didn't know what they were doing, and they don't know what they were doing.
That's simply not true. There's no data to support what he said. Once again, he's exaggerating, he's lying.
The only jobs he created are for illegal immigrants and bounce-back jobs, a bounce-back from the COVID.
Until we get the total ban on the total initiative relative to what we're going to do with more Border Patrol and more asylum officers.
I really don't know what he said at the end of that sentence. I don't think he knows what he said either.
How many billions of dollars do you owe in civil penalties for molesting a woman in public, for doing a whole range of things, of having sex with a porn star on the night while your wife was pregnant?
I didn't have sex with a porn star. I'd love to ask him, and will, why he allowed millions of people to come in here from prisons, jails, and mental institutions to come into our country and destroy our country.
The only person on this stage is a convicted felon, is the man I'm looking at right now.
When he talks about a convicted felon, his son is a convicted felon.
You're the sucker. You're the loser.
Killing Roe v. Wade and moving it back to the states. This is something that everybody wanted.
Dealing with everything we have to do with, look, if we finally beat Medicare.
This was supposed to address concerns. It exacerbated them. Instead of putting to bed questions about the president's age, if anything, he made the former president look 78 years young. There are some big questions this morning across this country.
And really highlighted, if you want to go to the election betting site, if you take a look at Predict It, they currently are pricing in a 62% chance that Joe Biden will be the Democratic nominee, down from 86% the day before. Real questions setting in about whether he will, in fact, be at the top of the ticket.
It was the one bar he had to clear. He had to put to bed these questions the nervousness within the American electorate that we see time and time again in polls, that he was up at 81 years old. He was up for another 4 years, up to the job, and he did not do that. Within the Democratic Party, David Plouffe, former President Obama's campaign manager on MSNBC last night, calling it DEFCON 1. Kate Bedingfield, Biden's former communications director, saying her former boss's performance was, quote, disappointing, saying his biggest issue, that he had the energy, that he had the stamina. He wasn't able to prove that last night.
A CNN flash poll, I think, speaks for itself. The results of that flash poll, Trump winning by 67 to 33%. That margin is absolutely huge. When you go through the details of that debate, just go through the timeline. Around 12 minutes in, the president appears to freeze. He was asked about abortion. He then pivoted to immigration. So abortion was meant to be the strength. He pivoted to the weakness. And then this goes on. And the moment where the president mumbles, and the former president steps in and says the following: I really don't know what he said at the end of that sentence, and I don't think he knows what he said either. And if you look at the reaction of the sitting president, totally disengaged as that moment is developing right there on camera, on TV for all to see.
There's some real conversations that are evolving. I think Greg Valliere was talking this morning about actually dementia, about mental wellness issues. Either way, I think that Anne-Marie really did nail it. The fact that we're talking about this so openly and so many Democratic commentators are commenting about this, the cat's out of the bag in terms of a lot of confidence around him. Punchbowl put it best. 2024 reality sets in, and a lot of people are really awakening to two choices that many people do not want.
Absolutely. If you were trying to ignore this election cycle, you can no longer ignore it, especially if you're an investor in this marketplace. And if you weren't watching, it's a good point you made. There were moments where President Biden seemed disconnected. He was looking down. He looked off camera a lot of times. But even if you weren't watching the screen, his voice was soft. His voice was hoarse. Why didn't the campaign or the White House tell us before the debate that he was suffering from a cold? Why did that come 10 minutes into his performance? A lot of questions are brewing around this potential individual as the candidate.
Let's get down to Atlanta, Georgia, and we can catch up with Bloomberg's David Gura. David, you hosted a show yesterday evening. There was a big question going into it, and it was a pretty low bar for the sitting president. Could he deliver? Could he get through 90 minutes and put to bed concerns about his age? And David, I think most people this morning concluding he didn't do it.
Yeah, we had a spirited conversation yesterday, the four of us, about how pivotal this debate could be. And indeed, I think it's extremely pivotal. And you bring up those comments that we've heard from very establishment members of the Democratic Party expressing a lot of doubt and trepidation about this candidate in light of what we saw last night. And I think that does change the tenor of the conversation surrounding him as the presumptive Democratic nominee in this election. But it was astonishing to watch. I, of course, wasn't watching it in person. I was in the media center. Nobody could be in the studio where the debate was taking place. But a very strange moment happened at the end of that debate. A lot of quiet as we kind of made our way down to the floor. And then all of a sudden, from each entrance, it seemed like we had surrogates for Donald Trump coming onto the floor, obviously very happy with the way that this debate had unfolded. And it took maybe 10 or 15 minutes before a Democrat made his way to the floor. California Governor Gavin Newsom finally came out. Georgia Senator Raphael Warnock was on the floor as well. But it was clear that in the aftermath of that debate, yes, there was soul searching, but also probably a very difficult conversation about what was the way in which they possibly could spin this as somewhat positive for the sitting president. I hear you mentioning that cold. I just don't know how much that's going to cut it. And these concerns that were swirling around him about his age and his competence and his fitness to serve another term in the White House, I think have really ratcheted up as a result of what happened last night.
Well, it's absolutely not going to cut it. David, you were in the room. The videos I saw were reporters swarming the likes of Governor Gavin Newsom. What are these individuals' responses, these people that are being floated as potential contenders that could step in if Biden were to step aside?
I talked to the governor last night before the debate, and we joked that nobody was enjoying the spin room more than Governor Gavin Newsom. I mean, he was swarmed by a throng of reporters, very eager to talk about the president's policies, very eager to say that he was fighting for the president's policies, talked about his travel schedule, how exhaustive that's going to be. You look at him and see him as a much markedly younger member of this Democratic Party and somebody who, of course, I think has presidential ambitions. And then you contrast that with the president. It is extremely stark. But even looking at those gaggles that took place after the debate, you had Gavin Newsom there, you had Raphael Warnock, a throng of reporters around them, but it was so large, reporters couldn't really have a give and take with those candidates. They kind of said their piece and moved on as a result. It was just clear, I think, from that dynamic Again, the imbalance of how many surrogates we saw for President Biden versus those for former President Trump. There was this recognition that this is a night that did not go by any means in favor of the sitting president.
It raises a question, David, since there have been so many opportunities and so many discussions around exactly this point over the past few months. Why is Joe Biden staying in the race? What is the conviction that's backing that in terms of not just the fact that he is the sitting president, but the fact that the polls are going south and that he is not reviving them?
I think that this is going to be a fascinating conversation, and there's going to be a lot of soul-searching as a result of this. You mentioned Kate Bedingfield, his former communications director, and what she said on CNN last night, really reckoning with what had happened and critical of the way that he had been prepared for and indeed executed this debate. Joe Biden has been in politics for a very long time. He has a very loyal group of people surrounding him. We talk about Biden world, and the message that we've gotten for months up until this debate is he can do it. It kind of mirrored what we heard going into the State of the Union. Oh, you're worried about him? He's got this. When push comes to shove, he's going to be able to come out forcefully and show that he has the aptitude for this. That is the message that we heard from this group of advisors, again, that's been around him for many cases for many, many years. I think there's going to be a moment now where the Democratic Party is saying, what's been going on here? There's a level of political irresponsibility surrounding the way that I think his presidency and his candidacy has been framed in terms of how he's able to do these things. And I think the debate is a clear example of that. This was a debate that he wanted to have. You look at the stasis of this campaign, where the polls have been for so many months. This was supposed to be a thing that, in the eyes of the Biden campaign, was to shake it back to life, was to be a kind of pivotal moment when we move more earnestly into the campaign. It seems like it's actually moved in the opposite direction. It certainly didn't advance what they thought would be happening here as a result of this debate.
David, great work yesterday evening and this morning, sir. Thank you. David Gura there, down at Atlanta, Georgia. Just to pick up on that last line, it's the debate that the president wanted to have.
Exactly. This was something he called early to try to be a pivot point in his campaign. It was anything other than that. Now people are actually talking about fundraising even. Who's going to throw their money behind him, and some real soul searching within the Democratic Party.
Terry Haynes of Pangea Policy has a bit of a different view on this. This is what he has to say. Our 2024 election view is unchanged post-debate, but the call is made with less confidence because neither candidate changed the game. In November, Biden likely wins by a nose. Terry joins us now for more. Terry, there are questions this morning, as you know, about whether his candidacy survives until November. Why do you take a little bit of a different view this morning?
Well, I just think you have to look at the debate in context. Look, I would firstly, I wrote and I would associate myself with everything that was said so far, so I don't want to reiterate it. At the same time, what you're seeing in pockets of the media, not here, but in pockets of the media, are people that were way over their skis in trying to validate and what now apparently is covering for Biden, and now they're kind of going the opposite direction and bedwetting on this to cover their own difficulties. So there's that. Secondly, I think you can't look, as bad as Biden's performance was, I think you can't look at it in a vacuum because you got a situation where Trump had a relatively good night, but at the same time, he's dealing with a split Republican Party, actual voters, not luminaries too, but voters, and lack of appeal to independents. And he didn't break out or make progress there. Any other Republican in that debate against Biden, there would be voters flocking to the Republican candidate. That's not the case with the Trump, and it's probably not going to be the case. Thirdly, I'd say, in short attention span theater land, now we're going to get on to the Trump immunity case, Trump's sentencing, the political conventions. This becomes part of a continuum that, we don't know how the polls are going to shake out. The polls have been way ahead of official Washington on a lot of this stuff. Finally, you got a situation where markets are understandably concerned about the direction and how they bet on this election. My point to you is that 70% likely right now what 2025 Washington's going to look like, and it's regardless of who the president is, you're going to have a split Congress, so you're going to have basically a lot of status quo.
Terry, Greg Vallier this morning writes something that frankly, I'm receiving a lot of messages about. Our tentative bottom line is that Biden will drop out within days, whether you like Biden or not. It was a sad sight last night as this once dynamic figure stared off into the distance with the look of a very tired and lost old man. Terry, is this possible? Is there a chance Biden looks at last night, his team looks at last night, and they say, we need to get ahead of this before August, before the convention, and step aside?
I share the sadness. I don't share the view that that Biden will drop out within days. Biden's worked his whole life to get here. He's not going to lose his grip on the office lightly or quickly. People should understand that. And that people should also understand the vast majority of the Democratic Party is not interested in embarrassing itself, and a quick flip on this stuff based on one debate performance would be exactly that. It would be a panic move that would, frankly, I think outstrip what went on in the debate last night, not look good for the Democrats or whoever their candidate is. So I think that's very, very unlikely, and I don't think that's what Democrats will do. I think Democrats will end up closing ranks, trying to figure out new ways in order to highlight Biden's sentience and energy, double down on the line that it's a cold and it's this and it's that, and move forward as best they can.
Terry.
The strategy had two components. One, an early debate would be good for him, and secondly, if it wasn't, they had a lot of time to correct it. So now here we are.
Terry, sorry to jump in here, but you said flip on a switch. This isn't a new discussion. This has been going on for months and months. David Gura put it really well when he said there is a question around political malpractice that hasn't been addressed more concretely earlier, that it is being left up to this moment that was set up by him as a pivotal moment. Right. How do you address that kind of concept that it has been sort of misadvisement that should be course corrected versus just allowed to keep going? How would you respond to that?
How I respond to it is I was, I think, one of the first to raise this as a real issue, even last year. Got a lot of buckshot for it, frankly. We've all discussed this on this program and others for months. So, you all have been, I think, well ahead of the curve, and I've been raising this as a real issue. Voters think it's a real issue. The places where it hasn't been a real issue is kind of inside the Beltway, official Democratic Washington, and in supporters in pockets of the media that have been enablers for that view. So, I think they're now scurrying to catch up more than anything else. But I think people should understand that panic is in part self-inflicted for that very reason.
Certainly a reality check for them this morning. Terry Haynes of Pangea Policy. Terry, appreciate perspective. This in from Politico. Democrats waking up to a nightmare. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Israel and Hezbollah are heading closer to a full-blown war in Lebanon. A steady tit-for-tat between the two that started October 7th has been shifting into something more alarming. Record numbers of Hezbollah projectiles have hit Israel this month, while Israel carries out deeper and more destructive attacks in Lebanon. Tens of thousands of residents have been driven from homes in both regions. Thousands of HSBC UK customers have been unable to access their online and mobile banking services. According to Down Detector, the bank saw major outages beginning in the early morning. In a post on X, HSBC acknowledged the widespread issue, saying its IT teams are working to restore service. Online card purchases can still be verified via text message. And a check on Nike this morning, shares tumbling 14.7% to the pre-market. Its full-year outlook fell short of expectations. The company said revenue would decline in the mid-single digits this fiscal year. Nike has been struggling to churn out lifestyle wear with little offerings to replace top sellers like Air Force Ones and Dunks. Instead, rivals have been picking up the slack, like Adidas, whose retro Samba sneaker are fueling a new era of growth. And that's your Bloomberg Brief. John.
Nike just not in the game. More on Nike a little bit later this hour. Up next on the program, wrapping up Q2.
We are in an era of stories, more so than we've been in a very long time. As far as I can tell, the NVIDIA story is going to last for years.
That conversation just around the corner, and why the S&P could hit 6K before the end of the year. That conversation up next.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Live from New York City this morning. No drama in this market, plenty of drama elsewhere. More on that a little bit later. Equity futures positive by 1/3 of 1% on the S&P. Under surveillance this morning, wrapping up Q2.
We are in an era of stories, more so than we've been in a very long time. As far as I can tell, the NVIDIA story is going to last for years. Some of these stocks, NVIDIA, Apple, Microsoft, represent very large percentages of the S&P. And so the normal risk parameters that apply to constructing portfolio don't necessarily apply to these.
So here's the latest this morning. The S&P 500 heading towards a third straight quarter of gains. Julian Emanuel of Evercore raising his year-end S&P price target to 6K. Writing this, 7,000 is possible by year-end 25. AI has permeated the consciousness of corporate America. This is a huge inflection on what we continue to view as game-changing technology. Julian joins us now for more. Julian, good morning to you.
Good morning.
We might navigate our way through some politics in Washington a little bit later in the conversation, but I've got to start with this price target of 6K on the S&P 500. When you put this out in the last week or so, how did clients respond to it?
Clients who know that, for the most part, we have been concerned about valuation on the one hand, yet have been, I would say, among the largest proponents of the game-changing nature of AI for well over a year now, really were sort of receptive to the fact that it was an introspective moment on our part. But we did the work, and basically, when you go back and you look at similar high-priced valuation regimes, valuation alone is not a reason to sell stocks. And when you've got a Fed that is really looking forward to cutting rates when it can. And you look at this morning, let's step back for a moment. We'll start the political conversation maybe a little earlier, John, is that you've got the uncertainty of what we saw last night. You've got a disruptive event in France coming this weekend, and you've got the world's most iconic footwear maker down 14%, and the market is rock solid this morning. Something else is going on.
All right. So you talk about the length of an expensive market. You talk about how it could be a prolonged period of time, almost 2 years. And the current expensive market is only 6 months old, so it's got more time to run. Wasn't Micron a reality check from that? That if there is any kind of lack of increased target expectations, the world falls apart, you see everything fall out of bed?
So it wasn't. I mean, if you look at the narrative, is it basically, that's traditional chips. That is not AI enhanced, supercharged, 2024, 2025 semiconductors. And essentially, the market, again, took it in stride against this backdrop of just incredibly ample liquidity. And from our perspective, part of what we do is sort of look to see if there's a bubble psychology forming. And when you think about, sentiment levels, you think about IPO activity, M&A activity, we're not concerned about the bubble aspect yet either by any stretch of the imagination.
Julian, let's get to the politics sooner than maybe we normally would. We had Steve Eisman on the show saying it doesn't really matter who's president. You can ignore this. Buy NVIDIA. Can you ignore moments like yesterday evening?
The market's telling you that at the moment you can. And I think that there's a rational response here, okay? If you look at the state of the equity market, and again, this subdued bullishness, but yet bullishness nonetheless, what this is really a recognition that after 2 years of essentially no earnings growth, we are back to an earnings growth pattern, both from a revenue perspective and from this ongoing ability of corporate America to control its costs. And frankly, AI over the long term is going to give even more power to corporate America to increase revenue and control its costs.
There's a great line in your research in the last week when you upgraded the S&P 500, the persistence of exuberance. The persistence of exuberance. What did you mean by that when you put that in?
Well, again, this is part of getting our arms around this high valuation regime. If you look back at these past regimes, they lasted 1.5 to 2 years, and you saw gains once stocks became expensive, and by that we define 20 times trailing earnings, which this one passed in January, of gains of 40 to 60%. Now, could there be payback? Absolutely, but again, that payback is a function of either a bubble forming or a recession directly on the horizon, and we don't see either of those at this point.
How different are U.S. markets than, say, France, and the exuberance that you talk about in the U.S. versus the outflows that we're seeing from French assets ahead of the election that begins on Sunday? Is there a sense in your mind that because of the AI developments, the U.S. is immune to political risk in a new way that people are not accounting for?
Well, and again, this is the kind of thing, and I go back to this valuation paradigm. It doesn't last forever. We have to be conscious of that. The Apple cart, there are no sort of overt signs of disruption. But look, America has benefited by being on the vanguard of technological development. This is a growth-centric market. Europe tends to be a value-centric market in the main. And this is the place where capital flows to, particularly in times of uncertainty. And when we think about the global political point of view, there's lots of uncertainty.
It's a unique privilege, and I'm so pleased you brought up this story, Lisa, because I can only imagine what the fallout in French markets would look like if those two individuals yesterday evening were French. We'd be talking about governance issues. We're talking about fiscal sustainability and what it's going to mean for French bonds. You are not having those conversations this morning in America, and the Treasury market's totally unmoved by it.
We would see Treasury yields surging because that's exactly what happened in France, in the French market. We saw the biggest outflows in many months from French markets as a result of what we've seen over there. How different is the United States politically? And how different is it not because of the actual fiscal policy, but because of the privilege that you talk about on the global stage?
Based on the price action, it's very different. Julian Emmanuel of Evercore is going to be sticking with us. He mentioned Nike. We need to talk about it. It's getting absolutely hammered in the pre-market. We're down by almost 15%. That conversation up next.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
3 days of gains on the S&P 500, looking to make it day 4, the longest daily winning streak going back to the middle of this month. Futures up by 1/3 of 1% on the S&P, on the Nasdaq up by 0.4 of 1%, heading towards a 4th week of gains and another quarterly gain on the benchmark in America. In the Treasury market, 2-year, 10-year, 30-year looks a little something like this. The 2-year, I believe, is up on the quarter. It is down on the month, and maybe the month is more instructive, Bramo, than the quarter, because the last month has been about weaker than expected economic data, and really starting to rethink what this Federal Reserve's going to do before year end.
It's backing away from this idea of higher for longer and possibly never landing, and this whole idea that the Federal Reserve was going to be really determined to hold rates high. The idea of an equal risk that inflation was going to reaccelerate as growth really threatened has taken the main stage.
The question we have in America this morning: do politics matter to financial markets? If you're French, absolutely. Switch up the board and look at the spread between the German 10-year and a French 10-year. That spread, Bramo, is through 80 basis points. We're at the wides of the year.
And basically, you're looking at the idea of the biggest spread between these two yields going back to 2012. Meanwhile, when you look at outflows, Western Europe recorded its first week of outflows since November of 2023, just highlighting how political risk does matter, just evidently not in the United States.
Big first-round vote coming up a little bit later this weekend. More on that story later on. Under surveillance this morning, front and center in America, Democrats in damage control mode. President Biden's performance in his first debate against Donald Trump, raising doubts over his candidacy and really raising questions about whether that first debate is the last.
This was supposed to be a recalibration. Biden was supposed to put to bed these questions, these whispers, if he's up, robust, ready for another 4 years. All it has done is aggravated those concerns. What you hear from the White House and campaign officials is that it's a double standard. Trump is just almost as old as Biden, yet what they've done, what many are calling, is political malpractice, because they put him forward in front of the American people when clearly he was not ready, looking off to the distance, one issue, a raspy voice, losing train of thought, and at moments, clearly, physically, almost freezing on camera.
Yeah, well, we've got 5 months. We've got 5 months until the election.
Does he have 5 months?
That's a great question, and right now it's looking like less and less. When you look at predicted, still the pricing of that sort of expectation of his running is about 62% chance. Gavin Newsom is at 21%. Kamala Harris is at 13%, according to this prediction market. I'm looking out, and I just keep thinking about this from Punchbowl. 2024 reality sets in. We are looking at an election that's kicking off at a time where an increasing number of people are extremely unhappy that these are their choices.
I like to look at two individuals who are friends of the show, Greg Valliere and Terry Haynes. This morning, Greg Valliere, our tentative bottom line is that Biden will drop out within days. Terry Haynes of Pangea says unlikely. That actually looks like panic. That looks even worse than what they need to come out and do. But the question is, what do? They need to make a massive move, because there's not another debate until September. And all of these moments of Biden looking confused and losing his train of thought, that is going to persist on social media and on television until that next debate.
Let's run with that word panic and draw a major distinction. a distinction between what's happening in the political world and what's not happening in financial markets. There might be panic in the Democratic Party. There is no panic whatsoever in financial markets this morning. I would expect, just to throw this in, I would have expected maybe the dollar to start rallying a little bit more on the prospect of Trump getting a big win in November, running away with it and doing something big with trade policy, which Deutsche Bank has already come out and said would mean big things for the US dollar. Adam Poston's already come out and said it could mean rate hikes in 2025. Not seeing that this morning either, and I'm trying to make sense of that too.
You just think about the people who've come on this show, whether it's Jay Pulaski saying that the currency is going to tank, versus we heard from Steve Eisman saying everything's going to be incredible. If Trump wins, you're looking at just a complete difference in opinion about what the outcome will come, depending on who the actual presidential winner is, as well as potentially the makeup of Congress.
Or is the market thinking this is 1968, this is Lyndon Johnson, and Biden will step aside? Because these conversations are now not just happening behind closed doors and whispers, they're happening out in the open. Following the debate, did you flip through CNN, MSNBC, individuals openly talking about how uncomfortable that was to watch?
Left-leaning networks that can't avoid what everyone could see for themselves for the last 6 months. And I think that's the issue that Terry Haynes been getting at in the last 30 minutes or so. Who's surprised by this? For a lot of people that get the phone call, maybe they run into a pollster and they ask them, what do you think about this? This has been shown in the polls now for the best part of 12 months. It's been certain segments of the media, and this is Terry Haynes' point, that have been spinning a very, very different story that couldn't spin it anymore after that performance yesterday evening.
This is what happens when you get tribal politics. When you have basically certain things you cannot say if you are part of a political party, and certain things that you can say, and you have that on both sides of the aisle, where people are not willing to challenge the status quo, and you've seen that get more and more entrenched, and a lot of people have been talking about that particular dynamic and how that could potentially change.
There is a little bit of economic data coming up later, for those of you interested. I'll throw that in there. 8:30 Eastern time. We'll get the PCE deflated, a Fed's preferred inflation gauge, plus personal income and spending data, followed by unmatched consumer sentiment data at 10 a.m. Eastern time. Before we get there, we need to talk about this as well. Shares of Nike getting absolutely hammered in the pre-market. The company's full-year outlook missing estimates, reinforcing concerns about waning demand and increased competition. Poonam Goyal of Bloomberg Intelligence joins us now for more. Poonam, we're down by close to 15%. Can you help us understand what is a market issue and what is a Nike issue? Because this feels like a Nike issue.
It absolutely is a Nike issue. The problem is innovation here. They pulled their foot off the pedal about a couple of years ago since the pandemic, and they really haven't brought out enough innovation to compete with the competition and to suffice customer demand. Now they're working on it, but it's going to take time, and it's going to be a painful year to watch them try to come out of this and really bring forward more innovation than their competition.
Poonam, when you talk about innovation, I'm thinking of running. I am a runner. I know many people who are runners. They don't think of Nike as being anywhere in the circuit, have not been catering to them, and instead you see Hoka, you see On Holding, you see all of these other brands that have managed to get the front stage. How do they get that back, and where do they go wrong?
Well, Nike is still a leading brand in running. So yes, you have heard, and you are probably seeing more Hokas and Ons on people's feet, but it still remains a dominant shoe for running. That said, you're absolutely right. They need to bring back innovation. They need to become more hip in running, right? They need to have performance. They need to improve their styles, and they're working on it. I think we're in this phase where things are looking ugly because they're just starting to really push forward on innovation. And to see that come through will take, I think, at least 6 to 12 months.
Poonam, appreciate your input today. Stock is down hard. Poonam Goyal there of Bloomberg Intelligence with that name down by double digits in the pre-market. This following a big move yesterday as well on another name, Walgreens. Lisa, you were all over the story as soon as it dropped. We closed yesterday negative 22% on that retailer.
Dragging down other potential drugstore providers as well with it, with the closure of a significant portion of their 8,600 stores around this country, raising questions about, is it a Walgreens problem? Is it a consumer problem? A lot of people said not so much. Or is it just a model problem, given the theft, the way that they've dealt with it, and frankly, the fact that Amazon is eating their lunch?
Julian Emanuel of Evercore is still with us. Julian, when you see moves like 22% on Walgreens, double digits on Nike, can we just keep sitting here and saying, idiosyncratic, 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 or do we have a broader issue at play?
No, we actually can say that it's idiosyncratic. And actually, one of the things that had concerned us until recently is this incredible dynamic where the correlation amongst stocks, not just the S&P 500, the entire universe, the Russell 3000, has dropped to all-time lows. Okay, normally, if you look back the last 5 or 6 years, that had been sort of the precursor to a correction. But the degree to which that has happened in recent months is so different that it actually calls to mind the potential, and this is part of sort of what our upside, if a bubble starts forming, you could get to 6,500 dynamic would look like, is that you actually have more correlated moves where all stocks start rising, like the end of 1999. But again, the fact that you could have this report down 14%, the largest, one of the largest pharmacies, tanking to that degree, it says that investors are absolutely not patient for stories that aren't working, but that the pickings of stories that are working are very, very, voluminous.
It also shows that there isn't a presiding narrative and that people aren't sure. This isn't, rip-roaring growth, but it's certainly not recessionary moment. And that's sort of what we felt come back into the zeitgeist, as John was talking about over the past couple of weeks. Suddenly, weakness seems like it is more on the forefront than, say, the chance of some sort of resurgence in inflation. So what happens if that weakness becomes more pronounced?
So when you think about all this noise that we've been talking about, and all the political volatility globally, you really can get a sense for why the market is much more comfortable with not really caring whether it's 6.5 rate cuts at the beginning of the year or 1.5 or 2 now, but more the fact that actually the Fed is looking awfully smart in stressing the concept of data dependence right now. But the market believes that however the data unfold, that the Fed will either exercise restraint appropriately and wait for the right time to cut, or, to your point, if the slowdown looks like it's accelerating, they'll be there front and center.
I'm trying to tap into a very simple underlying message, which I think you're trying to explain over the last 30 minutes or so. Are you saying just buy the index and sleep well at night? On the S&P 500, for all the talk of concentration risk, given your price target, given everything you've said, given the fact we can see these 20, 25% moves elsewhere and the index level's just there, rock solid, wouldn't know anything's going on. Are you saying just do that?
No, because actually, if you look at it, this low correlation environment is really good for active management. That's the first thing. A lot of people, yes, it is appropriate to own index exposure solely, but from our point of view, the market's bifurcating in a way. Look, we have to come to grips with the fact that there are only 2 sectors that are outperforming the S&P 500 this year: communication services, we know who's there, and infotech, which we recently upgraded. Our view is you need to be there, but you also need to be in the defensive sectors, healthcare and staples, because if we get the slowdown, those companies will be more immune to the slowing econ.
Julian, fantastic to see you. Julian Emmanuel of Evercore on a range of issues, but ultimately with a price target of 6,000 on the S&P 500 for year end. Later on in the program, we'll talk about concentration risk. Bramo, just to go through some of these stats from Liz Ann Saunders at Charles Schwab, only 17% of the S&P has outperformed the index over the last year. On the NASDAQ, that number is much worse. That number is 11%.
Just going through the overall full year so far, year-to-date averages, S&P is up 15%, NASDAQ is up 19%, the Russell 2000 up 0.6%. Even within the Magnificent Seven, you see such incredible dispersion with Apple up 11%, NVIDIA up 150%. So you put this together, you raise a great point. Why not just buy the index if you've got these pistons that are kind of firing, countering each other? Well, I mean, you could just count on them rather than trying to do the work yourself.
Liz Ann coming up at 8 o'clock Eastern time. Look out for that conversation later on this morning. Julian's saying that's not the message he's sending, just for the record. Just for the record.
He's laughing at
Let's
me.
give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Ukrainian President Vladimir Zelensky has signed a long-term security commitment with the European Union. The deal formalizes EU initiatives to support the nation. That includes arms deliveries and training for Ukrainian troops. Earlier this week, the EU formally opened negotiations over Ukraine's membership. L'Oreal is expecting slower growth for the beauty market this year. Weakness in China is weighing on their sales. L'Oreal told investors that they see the global beauty market growing between 4.5% and 5% this year. That high end had been their base case previously. The CEO says the downward revision is thanks to a flat Chinese market, which had long been a growth engine for L'Oreal. Shares are down nearly 10% this year. Microsoft has told customers that their emails may have been accessed by Russian hackers. In January, Microsoft had disclosed that senior leaders' emails were stolen, but now the company is acknowledging that the hack was more widespread than first thought. Microsoft has been dealing with strong condemnation by the U.S. government for security breaches, with the company now undergoing one of the biggest security overhauls in decades. And that's your Bloomberg Brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, playing the inflation blame game.
We're working to bring down the price around the kitchen table, and that's what we're going to get done.
He inherited almost no inflation, and it stayed that way for 14 months, and then it blew up under his leadership.
That conversation just around the corner, live from a beautiful New York City. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg.
Equities doing okay, positive by 0.36%, up about 1/3 this morning. In the bond market, yields a little bit higher by 2 basis points, 430.78. Under surveillance this morning, playing the inflation blame game.
We brought down the price of prescription drugs, which is a major issue for many people. We're working to bring down the price around the kitchen table, and that's what we're going to get done.
He has not done a good job. He's done a poor job, and inflation's killing our country. It is absolutely killing us. He inherited almost no inflation, and it stayed that way for 14 months, and then it blew up under his leadership.
So here's the latest, just over 90 minutes away from the PCE deflator, the median estimate in our survey calling for another month-over-month decline. Lindsay Piegza of Stifel pointing to slowing consumer growth, writing this: will a cooling of activity be accompanied by ongoing inflation relief? If so, the Fed can continue to focus on eventual easing. If not, an ongoing loss of momentum, coupled with still elevated price pressures, may result in the feared scenario of stagflation. Lindsay joins us now for more. So, Lindsay, I guess two-part question for you. What are you looking for at 8:30 Eastern time? And ultimately, based on those two options, what's your base case?
Well, we are looking for further improvement in terms of the disinflationary trend, getting us closer to that